To the European market open, everyone. A minute to go until the start of cash equity trading. I'm Francine Lacqua here in London, and here are your top stories. Tough times ahead. Rishi Sunak becomes Prime Minister today, warning of the economic challenges facing the UK.
There is no doubt we face a profound economic challenge. We now need stability and unity.
Rising rates boost banks. UBS beats estimates as tailwinds offset a global downturn. HSBC revamps its top team with a new CFO. And China rebounds. Tech leads the rally after yesterday's historic sell-off, while treasuries gain as the dollar stays flat. So good morning, everyone. What a week. It's only Tuesday, and it already feels like a Thursday. This is what the futures are looking like for the moment. European stocks or Euro stocks 50 futures gaining 0.3%. Of course, the FTSE, we're hearing more and more calls, including from JP Morgan, saying some of these stocks are actually quite cheap, certainly when you look on a worldwide basis. So the question is, what happens to bonds? I'm looking at treasuries. Thank you, Valerie, for helping me figure out this morning the kind of liquidity issues that we could see in treasuries. Overall, there's not the optimism maybe that there was just last night. Global equities holding some of the advances that we saw overnight, but there are also sharp swing in Chinese stocks. Other key markets in Asia followed Wall Street higher, following some optimism from the early U.S. earnings report. Tomorrow, we continue with big earnings news out of the U.S. Today, of course, we also look at the banks here in Europe that weren't as bad as they could have been. If you look at the France CAC 40, the IBEX over in Spain gaining between 0.5 and 0.6%. And then I would always look at some of the commodity stocks, including Brent crude 93.18. Gold spot 1,650. Now, this is your cross asset check. Now, a couple of things that we need to watch out for is, of course, the 20-year yield on treasuries. We have the U.S. 10-year yield. That's not where we're seeing the brunt of maybe some of the concerns about liquidity. We also know that Janet Yellen is preparing for some kind of special operations. On that, 41732 is what we're seeing. S&P futures pretty much flat, and then the U.S. dollar index 1,340. Now let's get over straight to our Bloomberg MLive managing editor. He's Mark Cudmore. And Mark, you're looking at central bank balance sheets. Good morning.
Yes, good morning, Fran. This is a chart of the white line showing the combined balance sheets of the four largest central banks in the world. That's the Fed, ECB, PBOC, and the Bank of Japan. And the blue line, or the turquoise line, or whatever you want to call it, that's been very correlated for the last 14 years, is the total market cap of all stock markets in the world. And you can see since late 2008, early 2009, these have been exceptionally correlated. Now, my colleague Cameron Christ would call these a naive overlay chart, because even though it looks wonderful over the past 14 years, they shouldn't necessarily be so directly correlated. But I think it's one of those situations where it's going to become self-fulfilling. People have convinced themselves that QE was the reason beside the explosion in asset prices we saw since the financial crisis, and particularly post-COVID. And there's certainly a lot of truth there. Should it have been such a direct correlation? Probably not. But it doesn't matter when it's been that good. And the peak has been so close between the balance sheets and, of course, the decline. What's ironic is this decline in balance sheets is mainly about FX. It's mainly about valuations and dollar strengthening, not about aggressive QT around the world, which is really only happening in the Fed, and many other countries aren't doing it. So, as QT begins to accelerate around the world, you can expect more reasons to sell stocks. However, I finish with a note of optimism. Stocks, the turquoise line, if you believe in this correlation, are already way ahead of the decline in balance sheets. They're already back, getting close to the level we were just after COVID, where central bank balance sheets are at the November level of that year, when we were still quite exploded. This probably suggests that there's room for a relief rally, but if QT does really continue into the middle of next year, we're going to have a lot of problems for stock markets as people get very excited by charts like these.
Yeah, people are get very excited, Mark. Great charts, of course, looking at some of the central bank balance sheets. And then I would also point to, I think we have a great story, Mark Endicurrent, looking at the fact that the Fed is, of course, losing billions, wiping out profits that funded spending. So we'll also look at the central bank balance sheets through that prism. Our Bloomberg MLive managing editor with some great charts, as always, Mark Cudmore. Now, the UK's incoming Prime Minister, Rishi Sunak, has warned of the profound economic challenge facing the country. Sunak will become the first person of colour to lead the country and the youngest PM in more than 200 years. Now let's get the latest with Bloomberg's Anna Edwards, who's at Westminster. Anna, what should we actually expect today then? The cabinet?
Yes, absolutely. That'll be the focus, won't it? Good morning to you, Francine. So the focus for the markets will very much be on the cabinet. Putting together the cabinet will be a job that Rishi Sunak has in front of him. But at the moment, he's leader of the Conservative Party, but not yet Prime Minister. He has to go to see the King to make that happen. But first, we'll hear from Liz Truss at around 10:15 UK time. She'll be outgoing from Downing Street, of course. She goes to see the King. Then Rishi Sunak goes to see the King. We've got fairly used to all this choreography. It's happened more frequently than it used to in recent years, of course. So we know how this works. Then Rishi Sunak at 11:35 this morning will be in Downing Street and make his first real address to the country. He spoke yesterday, but in very brief remarks, extremely brief remarks, in fact. So I'm looking for a bit more detail from him today, not really about policy, but some of the priorities he wants to set for his government. We are then focused on putting together the cabinet. Will Jeremy Hunt stay as Chancellor is the key question for markets. And October 31st, is that going to still be the date for the fiscal statement? Both of these things look likely, according to our colleagues and their reporting, but we'll look for confirmation. And then we look for confirmation of who takes on those great roles of state, foreign secretary, home office, and crucially, defence. Does Ben Wallace stay there? Because, of course, the war in Ukraine is something that will preoccupy Rishi Sunak in his new role as well, Francine.
So, Anna, what does Rishi Sunak actually bring to the job?
Yeah, well, this is somebody who we, in financial markets, we feel we know pretty well, don't we? He used to be Chancellor, of course, and for the country, they know him pretty well. He has a slick social media campaign. He was on our screens a lot during the time of COVID, and it was easy to be popular, and he was when he was giving away quite a lot of money. So he's a sort of known entity in that sense, but worth reflecting on some of the first that you mentioned in the introduction there. He's the first British Asian Prime Minister. He's the first non-white Prime Minister. He's the first Hindu Prime Minister, and it was announced on Diwali, which, of course, has been welcomed by many in the British Asian community. But he's also very steeped in the establishment here, from his schooling to the places that he has worked. So he comes through Goldman Sachs, he comes through 2 hedge funds, he has an MBA. That's a first, being from a hedge fund and an MBA background is a first for a Prime Minister as well. He, of course, boosted his reputation over the summer when he spotted holes in Liz Truss's plans for the economy long before she did, of course. We know what happened to Trussonomics. He had a good crisis and he has been rewarded by being given this position, but now he's the person who has to put it back together, has to face up to the challenges that the UK economy faces and the challenges that his party faces, Francine, is something that he has reflected upon in his first 24 hours as leader of the party.
Anna, thank you so much. Our Anna Edwards with some really fantastic interviews also throughout the day at Westminster for us. Now, that's the politics. Let's also break down the markets. Joining us, Ven Ram from our MLive team, Tatanya Puan Tubman, Deputy Chief Investment Officer. So thank you both for joining us. Ven, when you look at some of the fault lines, and I know we were chatting also offline about maybe some of the liquidity in fixed income across the world, do you worry that this will come to a head?
Morning, Francine. Yes, definitely it's a big concern for the market, what's going on with the liquidity issue. But I think that the Fed is actively looking to introduce buybacks. You know, when Janet Yellen, the Treasury Secretary, is on the case, it's more likely that they will do something about it. You know, the liquidity index, the Bloomberg liquidity index is very high, is very elevated historically, but even so, the index has come in a bit in the past few days, which shows the market is kind of confident that the Treasury will take measures to address this issue. I think at the heart of the issue is also whether they will ease regulatory constraints, because the banks need to set aside capital to hold treasuries in the balance sheet, and that is what this issue is all about.
Tatiana, thank you, Van. Tatiana, what's your take on this?
Yeah, I definitely think, we've seen market stress really elevated in terms of, liquidity stress in bond markets very recently. And it reminds me, on what happened in 2020. And so I think investors, they should be really careful about this, and they should probably get prepared, for looking very deeply into their portfolios and kind of identifying, where they can actually bring down this liquidity risk. So we've done this, for instance, during the last 1 or 2 weeks, in particular also with a focus on the UK market.
So, Tatiana, what does that mean? Where are you positioned today then? And will you add, for example, to some of UK assets if things stabilize from here on?
I think for international investors, given, the investment opportunities that you have outside UK, it is a little bit about thinking about, what are the opportunity costs of being invested in UK or not, or going somewhere else. And I think, again, for international investors today, there's not so many reasons to sort of accept the volatility that we should expect, going forward, that, should remain high in the UK in bond markets, but also in equity markets, given, all that happens on the political front. Because for sure, for Sunak now, it's going to be a very big job to clean up the mess. And we don't know where this is going. And so this is why we're taking a very prudent stance. And we try to diversify away, actually, and go, very broadly into international markets. Of course, in the credit space, for instance, in US dollar bonds, where we see a lot more opportunities, because also in the euro area, we actually see quite a lot of issues coming up.
Van Ram, talk to me a little bit about the gilt market. Are things going to stabilize?
Well, things have definitely stabilized since we got news that Sunak is taking the helm at Downing Street. But the point is, the long-term trajectory for gilts is far from clear, because he's got a stiff challenge on his hands, and a lot will depend on how he manages those challenges, particularly on managing the fiscal books, and then not to mention the monetary policy challenge that the Bank of England faces from mounting inflation. If you look at front-end yields, they've come off a lot, quite a bit, in the past week. But I do think that the trajectory of 2-year yields is higher, not lower, simply because the market's expecting a terminal rate of 5+% for the BOE. And if that comes to fruition, front-end gilts will need to sell off a lot more from here.
So, Van, are you expecting, first of all, and it's unclear, hopefully we'll have more news today, whether we have that fiscal spending plan on October 31st and whether Rishi Sunak actually keeps the current chancellor. Would that help the BOE's job? We have a big decision November 3rd, next Thursday.
Absolutely. I think that if the current chancellor stays, there's a good chance that, the BOE will know what is going on, because we heard from Dave Ramsden yesterday saying that they are already getting some messages from the Chancellor's office about, the spending and the fiscal balancing and all those things. And I think that will be crucial. Dave Ramsden also mentioned, the cap on energy bill, and those are going to be crucial pointers for what the BOE will do. Of course, the BOE will have to raise rates on November 3rd. There is little question about it, but how much is the question? As late as last week, we saw that the markets were factoring in a full percentage point increase. Now they are not so sure. But if there is a sense that, there is bound to be measures taken on the fiscal side that will limit inflation, then the BOE may be inclined to go 75 basis points rather than 100 basis points.
Ven, thank you so much. Ven Ram there with the very latest on his thoughts, of course, on where he sees gilts heading. And there's a great live blog entry from him. And we'll be back with Tatiana Pouhan, Deputy Chief Investment Officer at Tobam. Coming up later on the program, world leaders are warning Russia about escalating the war in Ukraine. We'll bring you the very latest with our Maria Tadeo. This is Bloomberg.
China's appetite for energy is enormous. The country consumes about a quarter of the world's energy supply, 35% more than the US annually. Its energy needs have more than tripled since the year 2000. That consumption has helped to fuel astonishing growth, but it's come at a cost.
China is the world's largest greenhouse gas emitter. There is no way to tackle climate change unless China reduces its emissions to net zero.
The country's reliance on fossil fuels is also a hindrance to its own growth and the well-being of its citizens.
China is not energy secure. It has a massive import bill for things like oil and gas. It has a long-standing pollution problem, and it is also prone to outages that severely hamper industry.
All this has led the world's biggest polluter to take steps towards a radical transformation.
Lots happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
We think that's the next secular shift.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
On the David Rubenstein Show, peer-to-peer conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology.
Welcome to Bloomberg Crypto.
We actually see quite some pickup on net interest income this quarter already. That is on the back of further improvements in the way we manage our clients' money from sweeps to deposits and other alternatives. We saw NII going up 14% between P&C and GWM. The fourth quarter, we're guiding a continuation of an increase of NII up to the 200 million. But even beyond that, given the fact that we don't only have exposure to US dollars with our clients, but we also have large amounts of deposits from clients in euros and Swiss francs, we actually expect more upside on those currencies next year.
And on that rates, the debate is whether it's peak inflation, peak rates. Where do you stand on US rates, which has been the alpha of this year? Where can we get to in dollar rates?
Well, we expect that the Fed will further hike, maybe to 5.25, to really fight that inflation. Maybe at the cost of a slight recession, if at all. But that danger is there. We think it's okay. On the euro side, we do expect further hikes to 2.25, and on the Swiss franc side, we expect further hikes to 1.25.
Can I challenge you a little bit? 5.25% is lumpy in the US. Yeah. It delivers a mild recession.
There's always this terminology. Is it a deep recession, mild recession? Is it 2 quarters? Is it 3 quarters? It doesn't really matter. I think for the US market, we've always seen that market is so dynamic, so the rebound will also be good. The job numbers are still good. The household numbers are still good. So I do think that further increases in yields will not be so detrimental to the economy.
Well, that was the UBS Chief Executive, Rolf Hammers, speaking to Bloomberg's Manus Cranny this morning. Now let's bring back Tatjana Pouwen, Tobam Deputy Chief Investment Officer. Tatjana, what do you do with banks right now in terms of the sectors that look attractive? Is there an opportunity for European banks?
I think I would be careful, with taking too big bets on particular type of sectors, because we have a lot of unknowns around at the moment, so a lot of uncertainty. And times of uncertainty mean that if you take a large bet on something, you can be caught on the wrong foot very badly. So that's why, I wouldn't bet actually on European banks at the moment, because we don't know also, where the conflict with Ukraine is still going to lead us, what is going to be the consequence, in particular on Europe. And also, we don't know what's going to happen next, with ECB policy and, how favorable this is going to play out for banks. What we see, for instance, in the subordinate market, in the credit space for financials, that very clearly here is a lot of repricing potential to the downside. And this is something that we, for instance, find quite concerning. So I think it is not very easy, and I would probably not try to take a bet on that.
So where do you put your money, Tatiana? Is there any sector in Europe that looks attractive because it's just been falling too much as we get into earnings season, or are you just very cautious on this region as a whole?
So from a general perspective, at our firm, we sort of we really are about diversification because we believe taking bets in the longer run is going to fire back at you. And what we currently see happening in our portfolios that are really trying to sort of broadly expose investors to a lot of different risk factors. Europe as a risk factor becomes sort of very much concentrated, and so the portfolio tries to look for opportunities elsewhere. In particular, we see the portfolio also starting to tilt more towards, for instance, the US market. But also here, it's not completely obvious that we will avoid a recession. So I don't share that much, the US CEO's opinion that if anything, it's going to be a mild recession. I'm more in the hard landing camp. So very clearly, I think it's going to be very hard to find a place to hide.
What does that mean, Tatiana? That there could be a huge sell-off, and so where do you put your money? Is it all in U.S. equities and dollar?
Well, again, I wouldn't put all my money on a card. I would stay diversified because, again, we don't know how much the different economic issues that we see at the moment in terms of geopolitical tensions, in terms of central bank policies, how this is exactly going to play out. So I think it's wrong actually to take a big bet on something, but we can observe certain developments. And very clearly, what we've learned from the last couple of months is that even in assets that are supposed to be not very risky, we see actually very, very big losses. We see losses of 10% or more. So this is what I mean with there's no place really to hide. So and if you stay invested in cash, then you have 8% inflation, which is probably not much better in a way. So again, I think the current market is just telling you that at some periods of time, it's first of all hard to make a bet, or it's hard to sort of try to outsmart the market because you might be caught very much on the wrong foot. Mm-hmm. And also sometimes you need certain repricings to potentially, kind of bring back markets into a more balanced equilibrium, because clearly, what we've seen before based on many things that happened over the last 10, 15 years, asset prices probably haven't been that much reflective of objective valuations.
Tatiana, thanks so much. Tatiana Pouen there, Tobam Deputy Chief Investment Officer. Now, coming up, world leaders warning Russia about escalating the war in Ukraine. We'll bring you the very latest on that. This is Bloomberg.
Go. After hardly a full year of name, image, and likeness deals being a reality, UCLA quarterback Chase Griffin already has more than 20 deals with major brands, venture, and charitable groups, all while balancing graduating undergrad in just 2 years and fighting for playing time on the field.
Chase Griffin out of the gun. We are joined by UCLA quarterback Chase Griffin. Not just UCLA quarterback, but name, image, likeness superstar. I am psyched for this one.
This kid could actually be the president of the United States someday.
When it comes to building generational wealth, it's not about the money that you make in college. I'm very excited that I made the amount of money that I made last year. I am even 10 times more excited that I know how to make that money.
Part of what I love about business is you get to build things from nothing.
I don't have any investors. All this is all money in. This is me just building it.
It's pretty much full service shadow banking with nobody in charge.
Welcome back to the Open, everyone. 23 minutes into the European trading day. For the moment, we're holding on to gains. The FTSE pretty much flat, but European stocks overall gaining 0.4%. Now, NATO Secretary General Jens Stoltenberg has rejected Russia's false claim that Ukraine is preparing to use a dirty bomb. He says the Kremlin must not use it as a pretext for escalation. Now, for more, we go to our Europe correspondent in Brussels, Maria Tadeo. So, Maria, give us the latest. How much of an escalation is this?
Well, Francine, there is this morning a real sense of escalation in this war. Also, a lot of concerns that something could happen in the next few days, and it could be serious. Remember, overnight, that warning from NATO repeating there is no proof whatsoever. We reject any allegations that Ukraine is preparing to drop this dirty bomb. Of course, for everyone, just to remind ourselves, these are explosives that get laced up and tied up and covered in radioactive material. NATO says they reject any allegations of that and repeat Russia should not use this as a pretext to then potentially use tactical nuclear weapons on Ukraine. Now, there are concerns, of course, that Russia could now decide to escalate given the fact that the war, the battleground for Russia right now is stuck. It's a very sticky war, and you've now entered a winter with no major advances. And of course, the question at that point becomes, what will the West do? How will they respond? There's a lot of military concerns, of course, that then that would enter, or you could enter a much darker phase in this war.
So, Maria, some relief, though, in the energy markets. What's going on with gas prices?
Yes, and Francine, you know, it's handy that I have my Bloomberg terminal. At one point today, if you look at the TTF, the Dutch benchmark, gas prices hit a low, session low of 94 euros a megawatt hour. That's, of course, on top of the declines that we saw yesterday. Remember, it hit below 100 euros a megawatt hour for the first time in June. A lot of this going back to the temperature and the weather. Remember, we talked about a twofold scenario, one in which, well, the temperatures could be very mild, another one in which the temperatures could be cold. For the time being, it's mild weather. And I have to say, Francine, I did check the weather for Brussels. On Friday, we're expecting 22 degrees. That is very unusual for a late October evening.
Thank you so much. Our Europe correspondent there, Maria Tadeo, with the very latest on energy and, of course, on NATO. Coming up, we'll also be in conversation with the Atlas Merchant Capital Chief Executive Officer and founding partner, Bob Diamond, live from the Future Investment Initiative in Riyadh. That's coming up shortly, and this is Bloomberg.
When the price of anything goes up, the consequences reach far beyond what you'd expect. But perhaps most of all, when it comes to food. In 2010, surging food prices helped spark the Arab Spring. Lives were lost, regimes fell, and the consequences are still with us. Once again, food prices are rising, and fast. Energy costs, broken supply chains, and surging demand were just some of the factors that have driven food prices to their first record high since the Arab Spring. And that's all before a war between two of the world's biggest food producers. Ukraine is called the breadbasket of Europe, and taken with Russia, the two account for about a quarter of global wheat trade. They produce more than half of the world's sunflower seeds and oil, nearly 20% of the barley. Now throw in rising energy prices, and processing, transporting, even refrigerating food gets more expensive. Plus, fertilizer production is extremely energy intensive. Less fertilizer means lower crop yield, and prices rise even more. The pandemic revealed how complicated and fragile global trade systems are. Global agriculture, perhaps even more so. Unlike metals, for example, food goes bad. And crops take months to grow and are vulnerable to unpredictabilities like the weather. Rising food prices will be felt everywhere, but the poorest countries in the world will be hit the hardest. And as all these factors compound, the real fear is that record high will lead to record high, and ultimately to a global food crisis with vast consequence.
From the world of politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays. This is Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg. Top experts. Great questions.
Welcome back to the Open, everyone. 30 minutes into the European trading day, and here are your top stories. Tough times ahead. Rishi Sunak becomes Prime Minister today, warning of the economic challenges facing the UK.
There is no doubt we face a profound economic challenge. We now need stability and unity.
Rising rates boost banks. UBS beats estimates as tailwinds offset a global downturn. HSBC revamps its top team with a new CFO. And China whipsaws tech rises in Hong Kong after yesterday's historic sell-off. Treasuries gain as the dollar stays flat. Now, this is a picture across the board for equities. If you look at stocks in Europe, they're pretty much gaining. And equity index futures in the U.S. pretty much steady. Mostly, we've had some positive earnings from a lot of the companies reporting today. In Europe, there is a bit of support coming in from the banks. The only one I would watch out for is the FTSE, a bit more pressure than other parts, of course, of the European market, down 0.4%. This partly due on currency movement. So we are also getting to a point where, for example, JP Morgan saying that these are becoming attractive because of the discount compared to some of their European peers. Remember, if you have the FTSE 100, then you're also exposed to a lot of the commodities, also companies that earn in dollars. This is a picture across the board for some of the sectors on the move. So if we look at the 19 groups that make up the stock 600, you have media, technology, and financial services on the upside between 1.8 and 1.2% higher, chemicals, energy, and banks under pressure. Now, UBS reported better than expected profit in the third quarter. Higher rates helping offset lower client activity at the key wealth management unit. Well, Armanis Krani actually spoke to the chief executive, Ralph Hammers, about how the bank performed in Asia and what his biggest fear is over the future of investing in China.
Clearly, Asia and China have some kind of a connection there, right? So from that perspective, indeed, part of the deleveraging is to be explained by how the markets in Asia have performed. Having said that, Manus, we have been investing in China for decades, and we are the go-to bank on the investment banking side for China. And our clients rely on that. And even this quarter, we saw good business. We were involved in 3 out of the 4 IPOs in Hong Kong, the largest IPO in Hong Kong as well. So equity capital markets were back #1 in the region. Also the China connected business. Now on the other side, with the confirmation of Xi to take another term, clearly we have to look at whether some of his policies that he already kind of issued last year, whether they will continue, like the common prosperity policy, which is an important one in order to have a more equal divide of wealth across the different classes, and that does provide us with an opportunity to develop further asset management and wealth management services in a capital light way.
So you're still fully committed, all in on China. It was $1 billion in terms of revenue, it grew to $1 billion. Can it grow? How much more can it grow for you, given the unknowns with Xi?
Yeah, I think you have to really separate strategy and tactics here. So strategy, nobody can kind of defy the underlying trends in China and the economic power of China, and what that does also for the business. The question is just, when will China open up from a COVID perspective? When will that growth be back up? How will they?
Zero COVID needs to go for the wealth managers to get out there.
It's not just the wealth managers. I do think that, a signal around easing around COVID, opening up for business, the support for the real estate sector, those will be reinforcing the economic power and also the economic development. And on the back of that, I do think it is worth to really look at the opportunities also in China. When will growth be completely back? Nobody knows, really. You can't really forecast that to the quarter, but it will be back because the underlying trends are there. And we have been in Asia for decades, and there is just bigger swings in Asia.
The UBS chief executive there, Ralph Hammers, speaking to our Manus Cranny. Now, the Future Investment Initiative gets underway in Riyadh, Saudi Arabia today. The summit brings together chief executives, policymakers, investors, and entrepreneurs to discuss international investment and the global economy. Well, let's get straight to Bloomberg's Youssef Gamaluddin, who's there with a guest. Youssef, over to you.
Thanks, Fran. I mean, there's definitely a huge buzz here in the 6th year of this event, more than any other year. We'll get to the details of some of the discussions here on the ground in a moment. But let's first start off with what's happening in the UK and get more reaction to that. We're now joined by Bob Diamond. He's the CEO of Atlas Merchant Capital. Bob, a new prime minister after weeks of uncertainty left investors scrambling. The PMI data that we got this week just showed the extent of the damage that's been done to the UK economy. The financial enormity at hand for this new prime minister, can't be underestimated. What do you want to see from Rishi Sunak?
So, when we thought about the Prime Minister Trust initiative around high growth, low taxes, low regulation, and people were comparing it to kind of a Thatcherite moment. If you go back to 1979, Youssef, when Maggie Thatcher started as Prime Minister, her focus was on inflation, number one. Interest rates came up to 20%. Her second focus was kind of on the fiscal hole at the time, 1979. And only after that, in 1983, was it about cutting taxes, cutting regulation, going pro-growth. And I think that's what the new Prime Minister, Rishi, will have in mind. And I think it's a little bit of cometh the moment, cometh the man. He's very market savvy because of his experience at Goldman and with hedge funds prior. I think he's very conscious of the fact that with the fiscal situation and with inflation raging, that we have to get the fiscal house in order first. So I would expect to see a much different approach.
With the fiscal house potentially coming more into order, where does that leave the Bank of England, though, Bob?
So I think the Bank of England has been very clear. First of all, I think the governor has played a blinder here. I think it was a tricky situation. And I think the way he managed the intervention in the gilt market was very astute, and we'll look back at that as a very positive development. I think now, to the extent possible, he wants to keep his focus on the fact that the number one issue is inflation and bringing inflation down. So I think he'll continue on the path that he's been on.
I mean, going into earnings season, you were a bit skeptical about some of the bank balance sheets. You suspected there might be quite a bit of pain that comes to the surface. So far, that doesn't appear to have materialized. Is that going to come more to life in the fourth quarter? And what is your read on what we've kind of heard both from Europe and from the U.S.?
Listen, I think the bank earnings, and in particular the credit provisions, have been about as expected, broadly speaking. We've looked at some of them as a little bit higher than expected, some somewhat lower. And, one of the questions that's coming out immediately is this prudent, conservative provisioning, or are there real underlying credit issues? And I think there's nothing we've seen yet to answer that question, and I think that's the question that we really need answered in the fourth quarter. My own view is that with the sharp rise in interest rates following 12 to 14 years of zero interest rates and fewer covenants, it's pretty clear that we're going to see some credit provisioning issues. One of the things that we're doing within Atlas Merchant Capital is continuing to invest in our credit platform, which is focused on distressed opportunities.
Good.
There haven't been a lot going back over the last few years, but I do think going forward, that's going to be a better opportunity.
When are we going to get this Fed to moderate a little bit in terms of tone? Because let's face it, the dislocations happening all around global financial markets are there for everybody to see. It's a financial accident waiting to happen. Do you expect them to move before year end?
You know, I don't think they're going to pivot quickly. I think they're going to really stay the course. I mean, if you keep in mind, it was like 150 trading days ago. So I think early March, the Fed was still buying securities. So they were still easing. And I think we saw a lot at Jackson Hole this summer about the rigor with which they're going through this tightening, if you will. And I think the Fed will be very, very focused on making sure, having waited too long with the onset of inflation, not sure it was going to be permanent, I think they'll err on the side of staying too long. Now, having said that, we are seeing some of the economic numbers begin to roll over. So intermediate prices, for example, are a leading indicator of what's going to happen with final goods prices. So I do think there's some positive news coming on that, and we would expect the Fed to continue to raise rates for the next two meetings, and it's possible at the end of the year they then put the pause on.
All right, Bob, thank you very much. As always, sixth year running that we catch up. Always a pleasure. That's Bob Diamond, the CEO of Atlas Merchant Capital. Fran?
Thank you so much, Youssef Gamoldin, live in Riyadh for us. Now, coming up, UBS Beats, more of our conversation with the Chief Executive, Rolf Hammers, who's speaking to our Manus Cranny. That's coming up shortly, and this is Bloomberg.
When I started, I had no idea it was going to turn into this, which is a tracksuit empire. I don't have any investors. All this is all money in. This is me going out and hustling, bringing that money back, and just building it, building it, building it. You gotta think about a person that was homeless at one point, didn't really have any money coming in. The fact that this person was relentless and just determined to succeed and not let rock bottom define him as an individual. I can take things and put them together and take them apart and make them better and put them back together. I respect the craft, so I don't want to minimize and disrespect the value of each step of the craft and do by machine what should be done by hand.
You've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
Earnings season is here.
There's so much to discuss today.
Strategists are quite spooked.
Bloomberg is fastest with the numbers and analysis.
LVMH beat forecast with higher sales.
Do fundamentals even matter right now?
Bloomberg, the fastest numbers and analysis you trust.
Welcome back to the open, everyone. We are 43 minutes into the European trading day. Stocks gain, futures pretty much steady. Again, we had a lot of earnings that beat estimates. The UBS chief executive with a fantastic interview done by our Manus Cranny. We'll get to that in a second. Also, HSBC and the chief executive saying they are committed to the strategy as they replaced the chief financial officer. Now, UBS reported better than expected profit in the third quarter as higher interest rates helped offset lower client activity at the key wealth management unit. Our very own Manus Cranny has been speaking to the chief executive, Ralph Hammers.
We see volatility in the foreign exchange markets, where we profited a lot actually this quarter. But you also see that volatility leading to further uncertainty with our investors, with our clients, right, on the wealth side. And that uncertainty is actually translated into the need for further guidance. So 90% of our clients are indicating we need more guidance. And if they want more guidance, that's why they bring their money to us. And that's why we saw the positive flow so strongly coming into our franchise this quarter.
Well, let's get to the man of the hour with the interview of the day. Manus Cranny is joining us. Manus, first of all, huge volatility in China. Does the country still remain core to the UBS strategy? And well done on the interview.
Thank you, Francine. Yeah, we're on floor 8 in London. No irony, Swiss Bank in London. Bit of a theme there. But China is core. There's a big sales target out there from the wealth management side, from the CFO side, and from the CEO. China is still core. You cannot strategically ignore it. It's 5% growth is the target. China will be part of that. And Hammers differentiated between the politics, which I put to him, you know, Xi's politics, his grip on power. What does that mean? He said it's still down to zero COVID. What he says on zero COVID, what he says on housing will change the narrative for UBS in terms of asset management and wealth management products. And if you look at the flow of money overall in Asia, still $7 billion of the $17 billion that came in as fee-generating assets came from Asia, which includes China. Fran.
Manus, buyback, net interest, the big story this morning. Talk us through the tailwind.
Yes. Look, this is. Look back to Jamie Dimon and JP Morgan. They had a record quarter. Net interest income is the alpha. They're going to make about $1 billion in NIMs this year if the fourth quarter plays out as they expect. But that tailwind may peak out in the U.S. Top rates for Ralph this morning in the U.S. was 5.25, which he says won't deliver a hard landing. So that's point one on the net interest income side. But then you have this additional dovetails or tailwinds coming from Europe, where we're just beginning that rate hiking cycle, and in Switzerland, Francine, and dare I say it, what could happen in the Bank of Japan. But the Swiss and the Euro and the UK are the tailwinds to come into 2023. They may deliver volatility. He doesn't sound like a man that's in the mood for a hard landing, and I think it's a debate about where do they go next. His Wealthfront deal went away. Do they look for new deals in the United States of America? We have a new US chairman at the bank. So I think the tailwinds are NIMs.
Manus, thank you so much. Manus Cranny there with really a fantastic interview. We're putting it out on social media and also on our website. And I would urge everyone to just go and listen to the whole thing. It's a great conversation, and it gives you quite a lot of insight into the chief executive's thinking. Now, in the meantime, about 20 seconds ago, we've learned that Adidas is set to end the Kanye West partnership after a lot of controversies. Frankly, the world of business has been talking about nothing else. Adidas was under mounting pressure to sever ties with the rapper and designer formerly known as Kanye West, after he made some anti-Semitic remarks. He's been, you know, we've really seen the growing fallout from the comments over the past few weeks targeting Jewish people, including a tweet that resulted in Twitter suspending his account. We now understand that Adidas is going to end Kanye West partnership after these controversies. It has not been confirmed, but it's according to Bloomberg sources. Now, HSBC has posted better than expected third quarter profit on the back of rising interest rates and announced that the CFO, Ewan Stevenson, is stepping down. So let's dive deeper into all of these banks with our Bloomberg senior bank analyst. He's Jonathan Tice. Jonathan, always great to speak to you, especially on the back of big news like we heard from HSBC and UBS. What do you make, first of all, of the HSBC numbers?
Well, the numbers are pretty solid. I mean, I'm a little surprised how much the stock's down, because we've got the upgrade to net interest income this year. For next year, clearly weak sterling is a drag, so that's a small disappointment. The fact that they're guiding to slightly higher credit charges, well, that's what the market's been sitting here waiting for the entire sector. So Decent set of numbers, very good cost control. The CFO moving, heard some interesting versions of why. One of them being maybe he was pushing a little too hard on cost control and put a few noses out of joint. I'm not sure I buy the lining up the new CEO early argument. I've seen a few stories about as well. But for me, decent set of numbers. They're doing a great job on costs. So a little surprised quite how weak. I mean, on valuation, this thing's got to be trading near all-time lows now.
Yeah. So, Jonathan, is you and Stevenson's departure, was it actually a surprise? And does it change? I know that there are rumors on why he left, but does it change the strategy? It does seem the chief executive is going to pains and saying it won't.
No, I don't think it changes anything, really. I mean, he's overseen some incredible transformation, probably some very, very painful conversations over the last 3 or 4 years. They're doing a great job on costs. It's been one of the key drivers. They've announced an additional $1 billion for next year. Does the strategy change? No. Probably a few more business exits. And the focus is very much now on running the business as is. And the new CFO comes from global banking and markets, which is the integral part of the business. One of the reasons that HSBC cites it shouldn't be broken up, and we actually buy that argument. So, no, for me, it doesn't change a great deal. It is a surprise. Don't think there's anything sinister there. And as I say, I'm a little surprised at the strength of the reaction.
What are the key takeaways, Jonathan, for banks overall? So we had UBS better than expected, HSBC better than expected, but then we have more controversial banks maybe reporting a little bit later this week.
Well, the key takeaways are we know that net interest income is a tailwind. The question is, what do you do with credit charges? Because we also know that the world's going to get a lot more difficult over the next 18 months. And reporting excess profitability, look at the UK, we've got the banks over the next 3 days. If there's going to be a windfall tax, do you front-load charges? Can you front-load charges to minimise your return on equity sort of excess profitability? So what Barclays, Lloyds and NatWest have to say, that's very interesting. But, I mean, clearly the cushion being provided by the mechanical uplift to revenue because rates have risen so quickly is a key positive. But look at the shares. The market's saying, you know what, we're still worried about bad debt. And I think the answer lies, as ever, somewhere in between.
All right, Jonathan, as always, thank you so much. Bloomberg Senior Bank Analyst Jonathan Tice. Now, coming up, plenty more on the UK's new Prime Minister in the next hour. This is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
On the David Rubenstein Show, Peer-to-Peer Conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
Welcome back to the Open, everyone. 53 into the European trading day. This is the picture for European stocks, gaining to, 0.3%. The FTSE still under pressure, 0.3% lower. In general, though, stocks in Europe gaining. This is also on the back of futures in the U.S. pretty much steady. We did have mostly positive earnings. That is helping with sentiment, and then also looking at yields, treasury yields dipping for a second day. Now, Adidas plans to end its partnership with Kanye West following a string of offensive behavior from the rapper. That's according to people familiar with the matter. Now, joining us is Joe Easton, who looks, of course, at our main stocks to watch. Joe, first of all, Adidas has been under fire for its silence over these anti-Semitic comments. Like, why has it been waiting so long?
Well, I think it's purely because of how much this is actually worth to them. So it's still around 8% of their sales as a company. So it's really a massive amount of money. So it's not quite as simple as, they need to sever it as quickly as possible. Obviously, they've tried to. There'll also probably be some kind of cost to get out of this contract. Kanye was actually pushing for higher royalties as well. So they were tied in for some big numbers in terms of the revenue there. So I think it will be costly, and that's why we've seen a negative reaction in the share price over the past few weeks in Adidas shares.
So is the calculation that actually, this is the right thing to do? Also, it was it was getting to a point because they were publicly questioned because they didn't take any action against these anti-Semitic remarks. This would have been worse in losing sales, overall.
Yeah, I think so. And a couple of other brands also acted quicker. So we saw Gap and also Balenciaga. They both acted quickly to kind of sever ties with Kanye. So that put more pressure on them. But yes, as you mentioned, some investors will be looking and thinking, why did it take so long? But obviously, according to our reporters, they are now moving ahead to cut those ties. That's according to our deals reporters today.
I mean, I think in September, he also disavowed some of the corporate deals. So, what's the future for him?
Yeah, well, I think some of the deals that he made probably weren't as beneficial as he thought they were. I think he was obviously not happy with some of the terms he got, hence why he's been trying to renegotiate some of those royalties. And it kind of, some people saying that some of the comments he made was almost a deliberate attempt to try and distance himself from these companies. But, knowing Kanye, that's the kind of thing that he's up to in terms of the kind of tricks he pulls over the years. So, we'll have to see if that confirmation comes through.
Yeah, we'll see. Joe, thanks so much. Joe Easton there with the latest on Adidas. Now, this is a picture for European stocks in all. Stocks in Europe actually gaining equity index futures in the U.S., also pretty much steady. Now, we did have a bit of fluctuation between small gains and losses after the strong performance on Wall Street just yesterday. I'm talking about S&P and NASDAQ futures. But then if you look at some of the outperforming estimates, certainly in terms of earnings, we have Microsoft, Alphabet, Amazon, and Apple reporting later this week. This is Bloomberg.
COVID has changed everything. People are changing the way they work. and the way they travel. Can you explain what you mean?
I think the world is never going back to the way it was fully before the pandemic. And one of the changes, I think, David, has been a change in how we work. Many people had a job at an office. They're not going to be required to come back to the office 5 days a week. And I don't think CEOs per se are going to determine these policies. I think workers will, because all of us CEOs, I think, want the best talent. And I think flexibility is going to be the second most important benefit after compensation. All of this, David, has culminated in Airbnb not just being a company about traveling, but now a company about living. So there's this whole new category of travel that's not classic 2-3 nights in a city. It's not long-term housing, and it's completely emerged because of the pandemic.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's what's coming up on today's program. Tough times ahead. Rishi Sunak becomes Prime Minister today, warning of the economic challenges facing the UK.
There is no doubt we face a profound economic challenge. We now need stability and unity.
Rising rates boost banks. UBS beats estimates as tailwinds offset a global downturn. HSBC revamps its top team with a new CFO. And shares in Adidas fall after Bloomberg sources say the sportswear giant is cutting ties with Kanye West following several controversies. Now, we'll keep, of course, a very close eye on Adidas, down 3% in today's trading session. We're also getting IFO figures. We'll be speaking to the IFO Institute head shortly to talk about energy costs. Germany, October, IFO Business Confidence Index is a little bit better than estimated, but of course, it's not a great reading, 84.3. Now, this is what the markets are interpreting as positive news from a lot of the earnings that we've had so far. Stocks are actually gaining across the board. European stocks gaining some 0.2%. The banks are down despite some better than expected earnings, not only for HSBC, but also UBS. And I look at the U.S. 10-year yield. Watch out for the 20-year yield. There are measures being put in place by Janet Yellen to maybe support that end of the Treasury curve, given the lack of liquidity or certainly concerns surrounding that as we get into the winter months. And then U.S. dollar 1,340. Now, when you make a difference between the FTSE and the Europe, some saying it may be time to buy. JP Morgan saying, look, because of the attractiveness evaluation for the FTSE 100 and the discount that they've been offered at because of the turmoil politically, this could be a good entry point, down 0.4%. It's energy stocks that are also under pressure today. Energy in general, including Brent, down. And of course, this is a very oil-rich and commodity-rich index. The CAC gaining 0.4%, the DAX 0.2% higher. Now, the UK's incoming Prime Minister, Rishi Sunak, has warned of the profound economic challenge facing the country. Sunak will become the first person of color, non-white, to lead the country and the youngest PM in more than 200 years. Now, for more, we're joined by Downing Street, by Bloomberg's Lizzie Burden. Lizzie, what exactly is the process today? When are we expecting him to have his cabinet in place?
Well, Francine, you'll have to forgive me for having a bout of deja vu because we were only here 7 weeks ago. Rishi Sunak's going to be the third British Prime Minister in just 2 months, and it's the same usual dance. At the moment, ministers have been heading in for the last cabinet meeting with Liz Truss. The Chancellor, Jeremy Hunt, I had to say, was looking quite chipper. Not sure I could say the same about Ben Wallace, the Defence Secretary. After cabinet, Liz Truss is going to make a speech out here at 10:15 a.m. She and Rishi Sunak will head to Buckingham Palace to see the King, and then Rishi Sunak will come back at 11:35 to make his own speech. It's going to be interesting to see how he reflects on his becoming Prime Minister. As you say, he's the first British Asian Prime Minister. Yesterday, Joe Biden, US President, said that it was a groundbreaking milestone. He was speaking at a Diwali event. And it will also be interesting to see how Rishi Sunak reflects on his vision for the economy. His 86-second speech yesterday was the first we'd heard from him publicly since the summer leadership campaign. But of course, much has changed in the economic and international context since then. But he did resist the temptation to say, "I told you so," when Trussonomics was imploding. And then later in the day, we can expect to hear who he's picking for his cabinet. He said it will be a government of all talents, and it's going to have to be, because this Tory party, after 12 years in government, is tired, it's divided, but his message to his MPs yesterday was unite or die.
So who's tipped to be in the Sunak cabinet, Lizzie?
As I say, Jeremy Hunt was looking chipper. He is tipped to be staying and to be going ahead with his medium-term fiscal plan on October the 31st, ahead of the Bank of England's November the 3rd decision. That means, though, that some of the key Sunak allies, like Mel Stride, Steve Barclay, may get other roles, perhaps Stride for Chief Secretary to the Treasury. That's what I'm hearing. And then the other question is, does James Cleverly stay as Foreign Secretary? Does Ben Wallace stay as Defence Secretary? Or does Penny Mordaunt, Sunak's leadership rival, get a consolation prize? Will there even be jobs for Boris Johnson and Liz Truss? Liz Truss, of course, kept Sunak out of her cabinet, short-lived as it has been. So lots to balance in terms of party unity. But the other thing that Sunak's going to have to do if he wants to be successful is to embed some wily political operators, perhaps people like Oliver Dowden, because this was proved to be one of his shortcomings in that debacle over his wife's tax affairs, and perhaps one of the reasons that he didn't beat Liz Truss in that summer leadership contest.
Lizzie, thanks so much. Lizzie Burton there outside number 10 Downing Street. Now, we're also joined by Christian Miller-Gleesman, Managing Director of Portfolio Strategy and Asset Allocation at Goldman Sachs. Christian, all over again, I need to ask you about the UK and the new Prime Minister. What are you expecting from Rishi Sunak, and what does it mean for your allocation to UK assets?
Well, I mean, as was mentioned already, there's at least a huge decline in uncertainty in this whole process, and you've seen that. I think the most important transmission channel has been the bond market. A big rally, a big decline in index-linked gilt yields and real yields, and that's positive in the sense that cost of equity, cost of capital broadly is coming down for UK assets, so that's supportive. And I think, as I mentioned, uncertainty risk premium comes down because you're going towards a more traditional style of managing kind of government finances, I guess, which is more conservative, it seems. So I think net is positive. I think we've liked the FTSE. I think part of the reason we like the FTSE is the high dividend yield, the low valuation, as you mentioned. So that certainly is still supportive. What we also like is the sector composition, because we're quite bullish on energy and commodities into year-end. But I think what has to be considered with the FTSE is that half of the dividends and more than half of the sales and earnings is coming from outside of the UK. So not to forget, as the pound potentially strengthens, that actually is a headwind for the FTSE.
But Christian, what will it take to get, the longer-term international investors back into the gilt market? And if you call that right, is that more of an entry point than in the next 6 months?
I think the big problem is the international competition you currently have. I mean, if you look at the index-linked yields in the UK, you're still hovering around zero after this kind of rally you just had. Whereas in the US, you're getting 150, 160 basis points. And I think the rates volatility potential in the US is actually coming down as we speak, because it looks like the Fed is starting to think about step down. And I think the Fed has been the key source of rates volatility for the kind of treasuries, whereas in the UK, that political uncertainty, the type of inflation uncertainty you have, because the UK is both having the labor market as a source of inflation and it's having the kind of more energy crisis issue. So that uncertainty means that UK rates volatility is potentially going to stay a bit elevated, even though we've seen the worst related to kind of government actions.
Christian, overall, what are you expecting actually with fixed income? I know there are questions about, the lack of potential liquidity in certain parts of the treasury market, and also in general with this huge readjustment, what central banks have to pay to stabilize some of them.
Yeah, I mean, what we've been writing in our last asset allocation update is we're getting closer to the peaks. So the peaks we've been looking for is peak inflation, peak hawkishness, and peak real yield. And as long as you get closer to those peaks, I think you're dealing with a potential for peak rates volatility. And that means the fixed income complex becomes more investable. I think the first step for us has been to go to places like investment grade credit, where you get paid to wait. There's a very attractive yield right now. But I think we're getting to a point where the bond market is more investable. There's a big debate we're having with investors with regards to if bonds can hedge in the portfolio again. As you know from our earlier conversations, we've been quite skeptical about this idea that bonds will do the same job in the portfolio that did in the last 20 years. That remains to be seen. It depends a lot on how fast and how credible inflation is coming down and how that allows central banks to offer that central bank put we've had in the last 10, 20 years. I would be quite cynical about that feature of bonds in the portfolio, that this will come back completely, but there's yield. I think we have to be clear, you're getting yield in cash, you're getting yield in bonds and credit, and I think that makes it a bit more interesting in the portfolio.
Okay, Christian, we also had some PMI yesterday, some flash PMIs really missing expectations across Europe. What's the good time, or how do you view Europe at this point? I know you were pretty diffident last time we spoke. Has it changed at all because of potential warmer weather into the winter months?
Yeah, you're absolutely right. I mean, there's one big change here. I think the winter has started relatively warm, so gas prices have collapsed. That has provided a bit of temporary relief. I think it doesn't solve the issues we have in Europe because the winter weather could change. I think that's not a good investment thesis. And as you said yourself, I think we're still dealing with a data momentum, with a deterioration of the data, which puts the fourth quarter earnings season and generally earnings into next year at risk because you're dealing with a lot of headwinds. So I think my sense is that, we still have to be a bit cautious with regards to saying we're through the energy crisis a bit too early. It feels like we've had a bit of relief, and that's material. You've seen that in the rally in the DAX yesterday, which has been significant, but it's also partially positioning. We discussed that last time as well. I think people are so bearish on Europe, and have been for the right reasons so bearish on Europe, that you can trigger relief quite easily.
Okay, Christian, thanks so much. As always, we'll get back to Christian and also this idea that while sentiment, as he says, and position somewhat bearish, maybe we're not at the end of the bearishness yet. Christian Müller-Gleesman from Goldman Sachs stays with us. Coming up, UBS Beats. Listen to our conversation with the Chief Executive, Rolf Hammers. That's coming up next. And this is Bloomberg.
China's appetite for energy is enormous. The country consumes about a quarter of the world's energy supply, 35% more than the US annually. Its energy needs have more than tripled since the year 2000. That consumption has helped to fuel astonishing growth, but it's come at a cost.
China is the world's largest greenhouse gas emitter. There is no way to tackle climate change unless China reduces its emissions to net zero.
The country's reliance on fossil fuels is also a hindrance to its own growth and the well-being of its citizens.
China is not energy secure. It has a massive import bill for things like oil and gas. It has a long-standing pollution problem. And it is also prone to outages that severely hamper industry.
All this has led the world's biggest polluter to take steps towards a radical transformation.
Clearly, Asia and China have some kind of a connection there, right? So from that perspective, indeed, part of the deleveraging is to be explained by how the markets in Asia have performed. Having said that, you know, Manus, we have been investing in China for decades, and we are the go-to bank on the investment banking side for China. And our clients rely on that. And even this quarter, we saw good business. We were involved in 3 out of the 4 IPOs in Hong Kong, the largest IPO in Hong Kong as well. So equity capital markets were back #1 in the region. Also the China connected business. Now on the other side, with the confirmation of Xi to take another term, clearly we have to look at, you know, whether some of his policies that he already kind of issued last year, whether they will continue, like the common prosperity policy, which is an important one in order to have a more equal divide of wealth across the different classes, and that does provide us with an opportunity to develop further asset management and wealth management services at a capital light way.
So you're still fully committed, all in on China. It was $1 billion in terms of revenue, it grew to $1 billion. Can it grow? How much more can it grow for you, given the unknowns with Xi?
Yeah, I think you have to really separate strategy and tactics here. So strategy, nobody can kind of defy the underlying trends in China and the economic power of China and what that does also for the business. The question is just, you know, when will China open up from a COVID perspective? When will that growth be back up? How will they?
Zero COVID needs to go for the wealth managers to get out there.
It's not just the wealth managers. I do think that, you know, a signal around easing around COVID, opening up for business, the support for the real estate sector, those will be reinforcing the economic power and also the economic development. And on the back of that, you know, I do think it is worth to really look at the opportunities also in China. When will growth be completely back? Nobody knows, really. You can't really forecast that to the quarter, but it will be back because the underlying trends are there. And we have been in Asia for decades, and there's just bigger swings in Asia.
Well, that was UBS Chief Executive Ralph Hammers talking to our Manus Cranny. Now we're back with Christian Müller-Gleesman from Goldman Sachs. Christian, is there buying opportunities? I know, you know, I don't know whether you look into stocks, not stock specific, but certainly sector specific in Europe compared to the US. But are banks and generic, you know, companies that are very dependent on rising interest rates a good deal right now?
I think in Europe, for sure, there is this tailwind on the rate side. And I think that to some extent should make them quite resilient into next year, where for most sectors you have these these headwinds for margins, whereas for banks you have tailwinds, which means you could decouple maybe from a negative earnings revision cycle. The big problem you have with regards to European banks is they become a bit of a target for windfall taxes, and that's been discussed in a variety of countries. And obviously, they can be exposed to capital markets activity as well, which might slow. And I think the important thing is, while this year was kind of dominated by rates volatility being the main risk for your portfolio, or the main risk for assets, I think next year there will be more focus on growth volatility. So you're transitioning over to growth volatility. And banks are of course, a very leveraged business model that's exposed to growth volatility. And while we don't really expect a default cycle, we don't really expect a profit recession, we just expect earnings growth to slow materially. I think you have that negative convexity, that negative exposure in the financial sector. So we have to be a bit careful because year to date, we're kind of quite surprised how little damage the rates volatility has done in the financial system. So we just got to be a bit careful as we get a bit more growth volatility. How resilient are the banks next year if there's some issues there?
Christian, overall, as we're in the middle of earnings season, are you expecting, I mean, could we see a scenario where earnings season actually quite strong, but then we get still a big correction in a lot of the European stocks, or are you expecting a global correction for equities?
Yeah, I mean, you're absolutely right. I think the earnings season has been good based on what we've seen so far. I think that is to some extent a lagging indicator. And I think the market is forward-looking. It can take comfort from the idea that if earnings are resilient, this idea of imminent recession risk and damage can be faded further. But I think we have to consider that the leading indicators are really poor. I think is that enough to drive a correction? I think the way I think about it is it makes the market very vulnerable for incremental shocks, for incremental information. I think what we've seen throughout the year is that equity risk premia have really compressed. So as bond yields have gone up, the relative valuation of equities has become less attractive. So that makes you vulnerable if you disappoint on growth, on cash flows. That hasn't happened really, but all the lead indicators are pointing towards risk in this direction. So if we don't get the rate side stabilize and or come down in the coming month, you essentially become more vulnerable to any type of growth volatility shocks that might be related to the earnings season. Probably not this one, could be next earnings season where investors get more worried, or it could be a completely new external shock. As we discussed earlier, maybe the winter does actually get colder and you do get more disruptions. Maybe you do get geopolitical conflict. These type of things, the market would be very vulnerable to.
Christian, thanks so much. Christian Müller-Gleesman, they're Managing Director of Portfolio Strategy and Asset Allocation at Goldman Sachs. Now, coming up, we'll have plenty more from the UK and Italy, both having new prime ministers, but also the attention turns to the US as we count down to the highly anticipated midterm elections. We'll bring you the very latest next. This is Bloomberg.
Go.
After hardly a full year of name, image, and likeness deals being a reality, UCLA quarterback Chase Griffin already has more than 20 deals with major brands, venture, and charitable groups, all while balancing graduating undergrad in just 2 years and fighting for playing time on the field.
Chase Griffin out of the gun. We are joined by UCLA quarterback Chase Griffin, not just UCLA quarterback, but name, image, likeness superstar. I am psyched for this one.
This kid could actually be the president of the United States someday.
When it comes to building generational wealth, it's not about the money that you make in college. I'm very excited that I made the amount of money that I made last year. I am even 10 times more excited that I know how to make that money.
How did Jeff Bezos realize you could sell anything on the internet?
The web was growing at something like 2,300% a year. Anything growing that fast is gonna be big.
Why did Bill Gates create Control-Alt-Delete?
Kind of become the poster child of, hey, couldn't you have made this stuff a little simpler?
And what inspired Diane von Furstenberg to create the wrap dress?
The wrap dress created me.
On the David Rubenstein Show, I uncover the untold stories of the world's most successful leaders, right here on Bloomberg.
From the world of politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays, this is Bloomberg.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacroix here in London. Now we're 2 weeks away from the U.S. midterm elections when Americans will head to the polls again. Control of the U.S. Congress is actually up for grabs. Well, let's speak now to Bloomberg's Derek Wallbank. Derek, this is a hugely important midterm elections for the U.S. and, frankly, the rest of the world. What do we need to know?
Well, what you need to know is that Democrats control both the House and the Senate right now very narrowly. The Democrats only have a tiebreaker lead in the Senate. They have about a 5-seat lead in the House. And if either one of those evaporates, then Joe Biden really has trouble passing a lot of what he might want on his agenda. And in addition, you would be talking about Republicans having control of key committees that could start really painful oversight hearings into all sorts of things Democrats would really rather not be burdened with, especially walking into the 2024 presidential election. So there really is quite a consequential election. And I think one of the things that you're looking at right now, Francine, is that it's very hard to say exactly which way this will go, although certainly I think polls right now are showing Republicans in pretty good condition to maybe pick up control of the U.S. House.
So what are the key risks, Derek?
Well, I think one of the things that people are understating right now is the real risk that we might not know who wins on election night. You look at a state like California. I mentioned there's 5 seats difference in the House. State of California, you only have to have your ballot postmarked by election night. There's 10 seats that the Cook Political Report says are in play in the state of California. There's the balance of the House right there. It's really possible that you won't know the House winner or the Senate winner on election night. People should be prepared for this to go into overtime.
All right, Derek, thanks so much. Derek Wallbank there with the very latest on the midterms. Coming up, we'll be speaking to the IFO's Institute President, Clement Fuest, after business confidence in Germany improved a little bit, but many concerns remain. This is Bloomberg.
When I started, I had no idea it was going to turn into this. It's a tracksuit empire. I don't have any investors. All this is all money in. This is me going out and hustling, bringing that money back, and just building it, building it, building it. You gotta think about a person that was homeless at one point, didn't really have any money coming in. The fact that this person was relentless and just determined to succeed and not let rock bottom define him as an individual. I can take things and put them together and take them apart and make them better and put them back together. I respect the craft, so I don't want to minimize minimize and disrespect the value of each step of the craft and do by machine what should be done by hand.
Lots happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
We think that's the next secular shift.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
Here are your top stories. Tough times ahead. Rishi Sunak becomes Prime Minister today, warning of the economic challenges facing the UK.
There is no doubt we face a profound economic challenge. We now need stability and unity.
Rising rates boost banks. UBS beats estimates as tailwinds offset a global downturn. HSBC revamps its top team with a new CFO. And shares in Adidas fall after Bloomberg sources say the sportswear giant is cutting ties with Kanye West following several controversies. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Francine, the UK's incoming Prime Minister Rishi Sunak has warned of the profound economic challenge facing the country. In a short address, the former Chancellor vowed to unite both the nation and his warring Conservative Party. Sunak, the first British Asian man in the top job, will officially take office later today after visiting King Charles. Now ahead of a key ministerial meeting today, Bloomberg has learned the European Commission is warning that any gas price cap would need to avoid subsidising electricity to foreign consumers. Brussels says a limit on natural gas prices would have to be extended to power importing countries like the UK or Switzerland, or risk of breaking a number of international agreements. A court in Iran has issued guilty verdicts and indictments for 315 people arrested for taking part in anti-government rallies. Protests triggered by the death of a young woman in police custody are now in their sixth week. State media say 4 people have been charged with deliverance, a crime that can carry the death sentence. U.S. officials say the administration won't change its stance towards China as a result of Xi Jinping's seizing more power in a key Communist Party Congress. They say they are still trying to set up a meeting between President Joe Biden and the Chinese leader. The two could meet on the sidelines of next month's G20 summit, which is happening in Bali. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg Francine.
Thank you so much, Leanne Gerrans. Now, Bloomberg has learned that Adidas is to sever ties with Ye, the rapper formerly known as Kanye West. Now, Ye is facing growing fallout from a recent string of offensive remarks. Joining us now is Bloomberg's Joe Easton looking at stocks. So, Joe, first of all, what exactly has led to the situation?
So I think there's been obviously a number of negative comments coming from Yeezy, and we've also seen a few of the peers have reacted quicker. So we saw Gap and also Balenciaga cutting ties with Kanye, and I think that's now put pressure on Kanye and Adidas to kind of resolve the situation, and Adidas now taking the steps, according to our reporter, to cut those ties. So I think it's probably been due to industry pressures really more than anything.
I mean, Joe, it's pretty surprising given the severity of some of the remarks that he has said in the public eye on anti-Semitism and things like that, that it has taken this long.
Yeah, I think that's really the big question for investors from a kind of governance perspective. Why did it take this long? Why didn't they act sooner? But actually, this brand, the Yeezy footwear, has been really high growth for the company. It's actually been one of the highest growth areas of Adidas's products, and it's around 8% of their sales now. So it's a big region for them in terms of their brands. And I do think that that's, the earnings impact is clearly going to impact management's thinking around this.
So I know they don't really break down the numbers, but do we think this is like, what, a $2 billion value for the sale of these products?
Exactly. It's around $2 billion. And it's not just the fact that it's $2 billion in sales. It's really high margin. It's one of the highest margin brands that the company's had. They often sell at full price, so you don't get many discounts in this brand. It goes into the big high-end stores and sells at full price listings, so you don't get those reduced value items. So it's a high profit sector as well as high sales for the company.
Joe, what I don't understand is that, so the share price is down in today's trading session, down 3%, but were people going to buy his stuff anyway after those, pretty, very offensive remarks?
Well, I think that obviously those comments, how quickly they feed into the general perception of the brand, it might, take quite a while. Kanye obviously is, a bit of a legend, a rap fan like myself, he'll always be that legend, but people will have to start rethinking this after those comments he's made. Obviously, it will affect his image, and we'll have to see whether it affects those sales going forward.
Joe, thank you so much. Joe Easton there, of course, our stocks reporter, looking at some of the biggest movers today. Now, coming up, as Rishi Sunak takes over as British Prime Minister in the coming hours, will it improve the investing environment in the UK? This is Bloomberg.
Has changed everything. People are changing the way they work and the way they travel. Can you explain what you mean?
I think the world is never going back to the way it was fully before the pandemic. And one of the changes, I think, David, has been a change in how we work. Many people had a job at an office. They're not going to be required to come back to the office 5 days a week. And I don't think CEOs per se are going to determine these policies. I think workers will, because all of us CEOs, I think, want the best talent. And I think flexibility is going to be the second most important benefit after compensation. All of this, David, has culminated in Airbnb not just being a company about traveling, but now a company about living. So there's this whole new category of travel that's not classic 2-3 nights in a city. It's not long-term housing, and it's completely emerged because of the pandemic.
Business is you get to build things from nothing. I don't have any investors. All this is all money in. This is me just building it.
It's pretty much full service shadow banking with nobody in charge.
Economics, finance, politics. This is Bloomberg Surveillance, early edition. I'm Francine Lacquet here in London. Now, German business confidence improved in October, though remained at depressed levels as Europe's largest economy heads into a challenging winter. Now, we're joined by the IFO Institute's president, Clement Fuss. Mr. Fuss, thank you for joining us. I was quite surprised that actually expectations were a bit better than expected. Do you think that a recession is avoidable, or at least a deep recession is avoidable in Germany?
I think it's very unlikely we will avoid a recession,
But what the current numbers tell us, I think, is that maybe there isn't as much drama as some people think. So the German economy is shrinking at the moment, but maybe at a slower pace than most people fear. And this is, as it were, a bright spot.
But is this because of an unusually warm October, which provided some relief to the energy crunch? And so could things get very bad very quickly into the winter months?
I think the major risk is a gas rationing scenario. That is a scenario that may occur in the first quarter of 23, around February. A lot depends on gas consumption in the coming months, and that in turn will depend really on the winter, on the weather. If it's a very cold winter, or if it's an unusually cold winter, things will get very tight. And if there is a gas rationing, parts of industry would have to stop production, and that would be very bad. As long as we don't get into that kind of scenario, I think we will get through this.
What part of the economy are you most worried about? So German inflation, we're seeing that at the fastest pace since at least 2000, and then we're expecting ECB to raise rates on Thursday.
It's certainly energy-intensive manufacturing, the chemical industry, the glass and ceramics industry, the steel industry, the metal industry. These energy-intensive companies have huge problems. Some of them have reduced production, and they would also be affected if there was a gas rationing scenario. We also have worrying data coming in from parts of the service sector, the hospitality industry. Here it seems to be the case that people are cutting down spending because they need money for heating and for gasoline, so they spend less on restaurants. So hospitality will also have a difficult winter.
Do you think the inflation squeeze will linger for longer than we think?
Our expectation is that inflation will remain high the next year, and then I think a lot depends on wage settlements, really. Unions are trying to compensate for the current high inflation. Wage demands we have on the table in the metal industry are around 10%. Now, if they end up with 7 or 8, that would be another push on inflation, and then we would get into a scenario of the unfamous wage price spiral. We are not there yet. But I really think for medium-term inflation, wages will be key.
I don't know how you look at zombie companies and whether, as we normalize, also with this huge inflation, you have numbers that give us an indication of how ugly it could be out there. How many companies would go bust in Germany?
So what we see is that, at least currently, there is no increase in the number of companies telling us they think they may go bust, or they think that their existence is under threat. In a way, that's surprising. So it seems to be that companies are relatively resilient, and it may also be the case that they rely on support coming from the government. That was certainly an experience from the last crisis, where the German government distributed a lot of money to stabilize the economy. It seems the expectation is they will do the same this time, and that's also what has been announced. So to some extent, companies seem to be relying on public support.
Mr. Fuß, give me a sense of where you would see the economy turning if we were to see a sharp downturn. Where would you see it first? I know in other countries, including the UK, it could be in the mortgage sector. Of course, it's always consumer, but is there anything else apart from consumer spending that you're watching very intently?
It's certainly the energy provision situation. It's also supply bottlenecks. Despite the difficulties we have in the economy, we still have supply bottlenecks. We still, at least in manufacturing, we have full order books, but companies are unable to serve these orders because they have difficulties getting intermediate goods. There are still bottlenecks, and this is another issue that hasn't gone away, and that's something that's holding back the economy too. It's not just consumer spending. All right, so Mr.
Fuß, not just consumer spending. Thank you so much for joining us. Clement Fuß, president of the IFO Institute. Now, after a pretty tumultuous Few weeks for the UK in financial markets. Rishi Sunak will enter number 10 later today as Prime Minister, as someone who the markets have come to know during his time next door as Chancellor. No doubt investors will be hoping that Sunak's premiership will steady the ship and boost the UK investment environment. Now we're joined by Rachel Stott, Associate Director at Growth Capital Solutions at Numis. Rachel, great to have you on the program. I think you also have a survey out looking at what UK businesses need now. Do we just need stability, or is there something else that, in terms of policies, that Rishi Sunak needs to put in place to make sure that we're on a better footing?
Hi, Francine. Great to be here. We've actually done our quarterly survey of the world's leading growth investors, including Andreessen Horowitz, General Catalyst, SoftBank, and more. And we're looking at what private markets investors are feeling right now. Obviously, it's a challenging environment, but and in the opaque nature of the private markets, we were looking to understand sentiment here and today.
And it's good or bad because of sterling and the fact that actually sterling is so cheap. Are you just going to see a lot of foreign investors come in?
Well, the private markets are increasingly global, and we certainly have a global remit. We are seeing more positive sentiment than you might expect given economic challenges. I mean, investors are unanimous that macro pessimism is here and will continue. 9 in 10 expect worse conditions to come. But there is a feeling for 2 in 3 investors, they recognize opportunity in the current market environment. And these growth capital investors are looking to increase their deal flow in the next 6 months. They're expecting to see more private companies coming to the market. And valuation expectations are aligning, and they're expecting a degree of stabilization. So,
and this is foreign investors, Rachel. Again, does it go back to pound weakness and the fact that actually it looks a bit like a bargain, or is it longer term, hope that the UK will give attractive returns?
Well, this is investors looking globally and global investors. So rather than being UK specific, this is a more constructive picture for the global private markets. Certainly stability in the UK private markets will be helpful.
And so the underlying condition of that is it the fact that markets, the public markets, have seen so much volatility that people think, well, actually, I'm going to allocate a bigger percentage of my capital to private?
Certainly, in our last quarterly survey, we saw crossover investors saying they were going to focus in the short term on the public markets rather than their previous focus between private and public. There is this feeling that the pessimism and the caution is now increasingly baked into the public markets for our growth investors. So 3 in 4 believe public software companies have been oversold, and 1 in 2 are expecting broad stability in the NASDAQ. So I think on the tech side, yes, there is this feeling that the public markets have baked in this caution, and that will transfer to the private markets.
Rachel, we've seen the private markets actually change quite significantly, as a lot of the private markets, before you buy something and then sell it off, and it'd go back into either public or stay in private, but change hands. Now a lot of these investments are staying with the buyer for a lot longer. Is this a trend to stay?
Certainly there's a trend that we're seeing private companies stay private for longer. There's 10 times the unicorns there were 10 years ago and fewer listed companies. But interesting your point on whether those will change hands during that life cycle. And we've investigated the trends in the secondaries market and sentiment there. Appetite in secondaries is high. For 2 in 3 investors, they're very interested in buying stakes, potentially quality names that they missed out on last year during record deal making at more reasonable prices. But there's a significant bid-ask spread that is impeding that liquidity on the secondaries market. Buyers are typically looking for a steep discount. Obviously, the best companies can command potentially flat or uplifts. But sellers are not yet ready to match those discounts. We think that will change over the next few months as the valuation environment becomes more transparent and potentially liquidity needs intensify. And that's a good thing for the private markets to have that secondary liquidity.
Rachel, thank you so much. Rachel Stott, their Associate Director for Growth Capital Solutions at Numis. Coming up, HSBC CFO Ewan Stevenson to step down as the bank posts better than expected third-quarter profits on the back of rising interest rates. That's coming up next, and this is Bloomberg.
appetite for energy is enormous. The country consumes about a quarter of the world's energy supply, 35% more than the US annually. Its energy needs have more than tripled since the year 2000. That consumption has helped to fuel astonishing growth, but it's come at a cost.
China is the world's largest greenhouse gas emitter. There is no way to tackle climate change unless China reduces its emissions to net zero.
The country's reliance on fossil fuels is also a hindrance to its own growth and the well-being of its citizens.
China is not energy secure. It has a massive import bill for things like oil and gas. It has a long-standing pollution problem, and it is also prone to outages that severely hamper industry.
All this has led the world's biggest polluter to take steps towards a radical transformation.
You've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition of Francine Lacroix here in London. Now, WhatsApp is experiencing a widespread outage with thousands of users reporting issues. Nearly 70,000 have reported not being able to send messages. Parent company Meta says it's aware of the situation. So, of course, we'll bring you any news on that. We know that a lot of people rely on WhatsApp. Now, let's get straight to your Bloomberg Business Flash. Here's Leanne Garrett. Hi, Leanne.
Hi, Francine. George Al-Hedri is to replace Ewan Stevenson as HSBC's Chief Financial Officer. The promotion sets a former markets head up for a potential frontrunner to eventually replace Chief Executive Officer Noel Quinn at the helm of Europe's largest lender. Stevenson is due to step down at the end of the year. Now, Apple has increased prices for its music and TV Plus services for the first time, citing rising licensing costs. In the US, the Apple Music price hike makes it more expensive than rival services from Spotify and Amazon. Services now generate nearly a quarter of Apple's sales, up from less than 10% in 2015. Apple reports its latest results later this week. The US has unsealed charges alleging two Chinese intelligence officials tried to obstruct a criminal investigation of Huawei. The complaint also says other suspects were working on behalf of a foreign power to try to procure technology and recruit spies. FBI Director Chris Wray says 10 of the 13 individuals charged were Chinese intelligence officers. And Carnival's Costa Cruises is cancelling all future Asia departures as hopes diminish of an early loosening of China's COVID restrictions. The company did not mention China in its statement, but had previously advertised big plans to tap consumers there. Costa was the first cruise company to enter China back in 2006. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Leanne Garrett there with the very latest on businesses. Now, HSBC posted better than expected third quarter profits on the back of rising interest rates and announced that the CFO, Ewan Stevenson, is stepping down. Let's dive deeper with Bloomberg senior bank analyst Jonathan Tice. Jonathan, good morning. So what do you make of the numbers?
Well, the numbers are pretty good, I thought. Fair enough, you've had a bit of front-loading of the interest rate rises, so this year's net interest income will be about $1 billion higher than they were guiding. Because of sterling, next year's they've guided a little bit lower. But the share price reaction either tells us that the market doesn't buy the bank's increased guidance for credit charges. We were all expecting banks to guide higher this year and next year, which surprises me slightly. Or there are concerns about the rationale behind the change of the CFO. Again, don't really see that. So you've now got HSBC trading at about 5 times 1 year forward PE. And I genuinely, in 20 odd years, cannot remember seeing it this cheap or this inexpensive.
So is Ewan Stevenson's departure a surprise?
It is a surprise. And who knows, I've heard one pretty seasoned analyst suggested to me earlier that maybe he was doing such a good job pushing on the costs cutting that he's put a few noses out of joint. Clearly, it's been a very difficult 3 to 4 years. Restructuring has been pretty brutal. I don't think I buy the argument that the new CFO is being lined up for CEO in 2 to 3 years' time. It's a bit early to be thinking that. So does it change the strategy? No, I do agree with Quinn that this doesn't make any difference to the outlook. You've still got the Canadian sale probably going ahead. You've still got a very tight focus on costs. You've still got 15% NII growth next year, very good revenue momentum. So as I say, I'm a little surprised at the strength of the fall, the size of the fall.
So what have, Jonathan, overall been the key takeaways from banks so far this earnings season?
Well, I think the key takeaways thus far are that the speed with which rates are going up, NII will continue to surprise to the upside. Clearly, banks are doing a pretty good job on costs. One thing we thought was inflation may mean that cost control goes out of the window. That's not the case. But the big question, and I think we'll see that with the UK banks later this week, is yes, you've got this huge mechanical uplift to your revenues just because of interest rates. How quickly will cost of risk catch up, and how much can banks be on the front foot and set money aside now so that A, they don't appear to be over-reporting profitability because you don't want the regulators to come knocking, and B, how much do they need to set aside and how much can they set aside? So those are pretty interesting questions for the UK banks over the next 3 days, given this windfall tax story that's been doing the rounds.
Yeah, Jonathan, I mean, how long does it take for a lot of these banks to stabilize, given we have a new government, we don't 100% know what the windfall tax is or, you know, what the future of the City of London is?
Well, I mean, they're all in very good shape. You look at capital compared to 2012, 13 or 2008, we've got a much bigger cushion. We've forgotten what rising rates does to revenue. So the mechanical extra revenue that's being generated by higher rates, of course you're going to get the regulators and watchdogs saying you need to start passing on some of this to depositors, not just through to your mortgage book and to your corporate loan books, but they're in good shape. So I think the market's right to be questioning how bad does it get, but I think we can't forget the starting point for the sector is so much better than it was 7, 8 years ago and a decade and a half ago.
Thank you so much. Our Bloomberg Senior Bank Analyst, Jonathan Tice. Bloomberg Surveillance Early Edition continues in the next hour. This is Bloomberg. Nurturing also can come from men, and it's one of the qualities, I guess, that you found in your mentors that also pushed you up. Do we need even more nurturing post-pandemic? Is the way that we talk with employees going to change?
I think talent becomes the single biggest differentiator of a successful entity versus an unsuccessful entity. So you've got to do everything possible to hire, train, retain, put your arms around talent. I mean, you've really got to focus on your talent. In the past, it's always been give them money, show them that they have an upward mobility and can make even more money, and that's the only reason people come to work. I think post-pandemic, we are seeing more and more people say, I have to worry about me as a person. I have to worry about my family. I want to worry about my well-being, my mental health. So we've got to start encompassing people as holistic humans as opposed to a tool of the trade, which means that we have to engage with them head, heart, and hands, not just head and hands. The heart has to be engaged. So we have to show more empathy, show that we care, that they're citizens of the community, they're members of a family, and all of those have to come into consideration as we help an executive or an employee be an employee and be a person of the community and the family. The stakes are higher.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
On the David Rubenstein Show, Peer-to-Peer Conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I am humbled and honoured to have the support of my parliamentary colleagues and to be elected as leader of the Conservative and Unionist Party.
We are committed to the UK. We're today here in the UK. We have a large office here in the UK. We run our investment banking activities from the UK.
It's critically important for us, the UK market. We have a significant presence there. We'll continue to invest in the UK.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
Good Tuesday morning. It's 5 a.m. here in New York, 10 a.m. in London, and 5 p.m. in Hong Kong. These are our top stories today. Rishi Sunak formally becomes the UK Prime Minister today. He faces an economy that's growing worse and a Conservative Party that's increasingly divided. Major banks surprise. UBS and HSBC report better than expected profits, and tech giants set to struggle. Microsoft may post its slowest sales growth in 5 years, while Alphabet's ad business is getting squeezed. Welcome to Bloomberg Surveillance Early Edition. I'm Matt Miller with Kaylee Lines here in New York. Anna Edwards is with us at Westminster. And Anna, I guess we see a former and a future prime minister visiting with the king today.
Yeah, absolutely. We've become pretty used to this, haven't we? We know how this goes now. It's been happening more frequently than it used to here in the UK. But yeah, Liz Truss will leave Downing Street, make a speech a little bit later this hour, in fact, in around 15 minutes' time. She goes to the King. Then Rishi Sunak goes to the King, comes back as the Prime Minister, makes a speech at 11:35. So in around an hour and a half's time. Interesting to see then, Kaylee, what he sets out as his priorities for his time at number 10, however long or short that turns out to be. And then later in the day, interesting to see who he picks for his cabinet, whether he confirms Jeremy Hunt as his Chancellor. Kaylee, before we get to that, though, important to check on the markets and what's been going on through the Asia session. I mean, we've been whipsawed by Chinese stocks, essentially.
Yeah, we absolutely have. Yesterday was just pure carnage for Chinese equities. Today, though, a little bit of stabilization and relief coming through in the Asian markets. The Hang Seng China Enterprises Index, after a 7.3 decline in the Monday session, the worst day since 2008, had a bit of a rebound, but of course only went so far to recover yesterday's losses, that ending up about 1.3% higher on the day. Meanwhile, onshore in mainland China, the CSI 300 benchmark there continued declines, but only of about 0.2%, so nowhere near the pain we saw in the Monday session. But of course, there's ripple effects in the FX market as well. The PBOC actually setting its lowest fixing rate for the Chinese yuan in 14 years, and as a result, the onshore yuan at its lowest level, weakest level since 2007, trading at the weak end of that 2% band around the fixing rate, and the offshore yuan is trading at yet another record low, weaker against the dollar by about 0.5%. 735.91 is where we trade at the moment. And of course, concern around the China story, specifically demand coming from China in the face of slower growth, is showing up in the commodity complex as well. In Singapore overnight, iron ore futures down another 2%, now at 88.80 a ton, Matt. That That is the weakest level on iron ore going back to November of last year.
Yeah, interesting to see that continued drop in commodities prices. We see that here as well in terms of oil with Texas Intermediate, although I have to say every morning we have red arrows. It seems like we're still hovering at the same price, $83.91 a barrel. Bringing it up to the top here, S&P futures are down just about 0.25%, but after another big rally yesterday, a gain of more than 1% on the cash trade and finishing up at almost 3,800 on the S&P 500. So we're back up to those levels. The U.S. 10-year yield coming down almost 7 basis points as investors buy that debt. 4.1732 is the level on the 10-year. And then looking at Bitcoin, speaking of unchanged prices, it's the same story as every day here, 19,292. So Bitcoin continues to be stuck in this range. Anna, what are you seeing in Europe?
Yeah, pretty mixed picture here in Europe then, Matt. You've got S&P futures pointing a little lower there. That's not helping sentiment here in Europe, of course. 2 hours into the trading session, things look pretty mixed. The German market, the UK market under pressure, the French market doing a little bit better than the rest. We've had yields down for a second day. That was helping sentiment around European assets earlier on this morning, and also some of the profitability reports, some of them helping sentiment. We'll get to those now. But before we do, in fact, let's get to the natural gas price, because this has been falling once again today, and it's something we reflected on a few times in recent sessions. The fact that it's below 100 euros per megawatt hour, now down another 3.2%. This milder weather. I know I'm sitting here wearing a scarf, but it is milder weather. I've just been here a long time and it was early when I got here. It is milder weather here in Europe than many had anticipated, and so 96 euros, we see this price fall. Important to keep an eye on some of these other corporates. I'll go through them. Adidas, that stock down by 3.3%. They're said to be ending their partnership with Kanye West, as he was once known. Seemingly offensive behavior on social media, partly to blame there. We'll wait for confirmation from the company, but that's the talk. HSBC, we need to focus on the banking sector. HSBC shares up by down by 6.3%. On the negative side, loan losses higher than estimated in China and the UK, and they're changing their CFO. And the net interest income help not offsetting those concerns. On the other hand, over at UBS, that share price up by 4.6% as net interest income did help sufficiently there, help the business to beat expectations on profit, and that did offset lower clients' activity from wealth management in terms of sentiment towards the earnings. So a pretty mixed picture from the banking sector. That's what we have here in Europe. Back to UK politics. I'm here in Westminster. Rishi Sunak is set to keep Jeremy Hunt as Chancellor of the Exchequer, we understand, as he seeks to calm markets and form a united government when he becomes UK Prime Minister. That is set to happen today. At the age of 42, Sunak will become the UK's youngest Prime Minister in more than 200 years.
I am humbled and honoured to have the support of my parliamentary colleagues and to be elected as leader of the Conservative and Unionist Party.
Bloomberg's Lizzie Burden joins us now from Downing Street. Lizzie, good morning to you. So we're first going to hear from Liz Truss today. What are we going to hear from her, and what does the day's choreography look like?
Well, Anna, the lectern is out, and this is going to be Liz Truss's last speech as Prime Minister, her last chance to try and rewrite history, but the history books are not going to forget that she has been Britain's shortest-serving Prime Minister. It's going to be hard to forget, and also this term has been even shorter because of the expedited selection of Rishi Sunak. Remember, Boris Johnson's farewell speech was peppered with hints about returning to power. I'm not sure there'll be any classical references in this one, or whether she nurses any hopes of returning to number 10. But her own view of her premiership is that she tried to deliver a bold economic strategy, but perhaps went too fast and too far. The market view is that she's bequeathing Sunak a more on-risk premium that's going to make his decisions even harder on the economy. Whether there's any positive spin to be put on that, we'll see shortly.
Well, and we will hear from Sunak as well. Lizzie, what do we expect to hear from him, and what does his day look like today?
Well, after he and Truss go separately to Buckingham Palace to see the King, he will make his own speech at 11:35 here at Downing Street. And it's going to be interesting to hear his own view on becoming Prime Minister, whether he reflects on the significance of becoming Britain's first British Asian Prime Minister. Joe Biden, of course, said that it was a big milestone in history at a Diwali event yesterday. It's also interesting whether Sunak gives any more clues on his economic vision for the UK. His 86-second speech yesterday, the first public speech since his leadership campaign, but we want to know what he's thinking now, but given the international and economic context has changed so much since then. We'll also expect him to name his cabinet. He's said that there's going to be a government of all talents, but it's going to need to be because his party, after 12 years in government, is tired and it's divided. So unite or die is the message he gave to Tory MPs last night.
All right, Lizzie, thanks very much. Bloomberg's Lizzie Burden there, standing in front of 10 Downing Street, awaiting the changes. Now, UBS reported better than expected profit in the third quarter as higher rates helped the bank offset lower client activity at its key wealth management unit. The CEO, Ralph Hamers, sees share buybacks reaching about $5.5 billion this year. He spoke with Bloomberg earlier.
It really depends on how the market's developing and also the liquidity in the market, because there is a limit to what we can do. Year to date, last Friday we were at 4.6. We will continue at the same level of speed. So we should be getting certainly over the 5 billion towards the 5.5.
Bloomberg's Manus Craney joins us now for more. So, Manus, UBS up today on the bank's buyback comments. What are the other alphas for the rally, as they say?
Look, the stock's up 4.5%, 2.5 billion in terms of market cap. This is a pretty strong day. And Matt, this comes with the debate around, are we at peak rates in the United States of America? Ralph Hamers said to me he reckons rates in the States get to 5.25%. But it's then the additional tailwind. So that gives you about $1 billion of NIMs for this year. But then, of course, the Bank of England, the Swiss National Bank, and the European Central Bank all will begin perhaps a more aggressive rate hiking path. That gives you a dovetail and an additional tailwind to net interest income that's delivered at UBS. I think there's another few interesting facts, which is about the fee-generating assets that came in. $17 billion, $7 billion of that came from Asia, despite the catatonic meltdown in some of those Asian markets. So I think it's a double boost, really, Matt, in terms of the alpha. I put that in there for you because that really is what's going on today. It's up 4.5%. China is still core, and the UK is still an incredibly important point for them. They are fully committed to the UK. Floor 8, UBS, Broadgate. Matt, Anna.
And Kaylee, Manus Craney, thank you so much for joining us. A great interview with Mr. Hamers there. Now, from European bank earnings to tech earnings here in the U.S., they kick off this week with Microsoft and Alphabet both set to report today. Once the key growth engines for the S&P 500, mega-cap tech profits are expected to fall by the most in at least 3 years. Alex Webb of Bloomberg Quick Take joins us now for more on what to expect. Alex, what do we realistically think these companies are going to be able to deliver in an economic environment like this one?
So as you say, the consensus is anticipating a 22% drop in earnings per share, which will be the worst quarter they've reported in about 3 years. Now, this is obviously being driven by consumer sentiment on two levels. Firstly, if you're in the business of selling consumer electronics devices, as to an extent Microsoft is and Apple is, they don't have as much capital to spend on those sort of products. But then that also carries on to advertising spending, because advertisers will spend to win market share, to win customers, when those customers have money. The first thing that they tend to cut in economic downturn is ads. That therefore has an impact on Alphabet, on Facebook, Meta, and all the other social media and ad tech companies. Ultimately, there's a hope that there might be a glimmer of growth from the cloud businesses, but of course we're not in the lockdowns anymore when companies really needed those cloud operations.
All right, so what are we expecting them then in terms of the pressure on margins, in terms of the inflation impact on these companies?
So they are particularly actually talking about a currency impact that pertains largely to the consumer tech companies. That's what some of the analyst commentary is saying about Microsoft. When it comes to inflation, you know, historically, the ad tech companies have been able to just keep squeezing prices up. Google maybe has more power to do that than does Meta because its services are a little bit more essential. You have to use Google search if you're trying to navigate the web, a lot of people would tend to think. So perhaps more impactful on Meta than it is on Alphabet.
All right, we will be looking out for those results after the bell today. Alex Webb of Bloomberg Quick Take, thank you so much. Now let's take a look before the bell at some stocks moving in pre-market trading. And I want to focus not on U.S. technology stocks, but Chinese technology stocks, because as we've mentioned a few times, yesterday was absolutely brutal. The likes of Alibaba, JD.com, Baidu, all down between 12 and 13%, but they are seeing somewhat of a rebound in pre-market trading, each up between 2 and 2.8% for those names. So definitely ones to watch in the session today. Another stock to watch that is moving sharply lower is Zions Bancorp. It reported earnings after the bell yesterday, missed expectations. They're dealing with a little bit of deterioration when it comes to deposits. As a result, it is down about 6.5% before the bell, Anna.
Kaylee, coming up on the program, we will speak to Alberto Gallo, Andromeda Capital Management's Chief Investment Officer and founder. Alberto joining us for this conversation from his new outfit. Really good to speak to him. We'll talk about the aftermath of the UK's Trussonomics crisis, what it means for the UK, but also talk about treasuries. We will get into a conversation about UK politics as we wait to hear from Liz Truss, outgoing Prime Minister, and Rishi Sunak, the incoming Prime Minister. Rob Ford, University of Manchester Professor of Political Science, will join us. We'll get his perspective on what the electorate wants to see here. This is Bloomberg.
If you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
Part of what I love about business is you get to build things from nothing.
I don't have any investors. All this is all money in. This is me just building it.
It's pretty much full service shadow banking with nobody in charge.
Earnings season is here.
The earnings are starting to pour
The
in.
numbers are holding up better than expected.
Sorry, business isn't all that bad. Bloomberg breaks the numbers first.
Netflix earnings going to cross the wire.
Big beat. Stock is up more than 8%. Coming in stronger than their rivals.
With exclusive expert analysis.
Finally back to growth.
The mother of all opportunities.
What is the industry to watch? That's where the rubber hits the road for Goldman Sachs.
It's going to be a really interesting earnings season.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
Welcome back to Bloomberg Surveillance. This is the early edition. I'm Matt Miller here in New York at Kaylee Lyons. Anna Edwards with us out of London. I'm looking at break-evens today because we're seeing continued push higher in the last few weeks. Okay, it's nothing compared to what we saw in February or March. We were up around 5% on the 2-year, but we're pushing back up towards 3 now from a low of 2. Joining us is Denitsa Zykova, Bloomberg Cross Asset reporter. And Denitsa, what this says is the market is pricing in more inflation than it had been a couple of weeks ago. Why the change?
Yes, exactly. We're seeing a significant increase, and actually this is the fastest pace of increase on 5 and 10 years since we've seen in like June 2020. So why we're seeing, of course, is the big question, but if you look at the CPI prints, we saw a few hotter than expected prints. We also saw core inflation rising, which is kind of the stickier inflation the Fed is more worried about. If you look at consumers as well, we also saw longer-term inflation expectations rising after falling for a very long period. So the big question right now is, were markets getting too optimistic on inflation, or are markets kind of rethinking that longer-term 2% Fed target? And of course, if there is a longer-term shift, what does that mean for all asset classes?
Yes, and on that point, Denitsa, good to speak to you. What does positioning look like now, given those changing inflation expectations and the rally we've seen in risk assets, in stocks in recent days? How are markets positioned?
Yeah, for sure. There is like a little bit of a change in terms of there is a little bit more bullish sentiment. But in terms of positioning is still very depressed. If you look at hedge funds, short stock bets are still fashionable. If you look at CTAs, short stocks, short bonds. If you look at active major, there is a little bit increased exposure into stocks, but compared to what we see in 2021, or like, for example, in the more bullish months of the year, like April and August, we're very, very far away from that type of sentiment. Even retail traders, which in the past have been that kind of deep buying support, kind of bullish optimism, activity there is quite depressed, and when it comes to positioning, we're seeing a strong bearish sentiment. So of course, we've seen that speculation that maybe we're at peak hawkishness, but in terms of positioning, we're not really seeing that transition that maybe will require a little bit more bullish positioning.
Denitsa, thank you very much for your thoughts. Bloomberg's Denitsa Zykova joining us there with thoughts on the markets as we see sentiment deteriorating just a little bit this Tuesday. Just keeping you up to date with the UK politics here in Westminster. We've just seen there she is walking away. The UK Prime Minister Liz Truss delivering her final speech outside number 10 Downing Street, goes to join her family as she walks down Downing Street. The assembled international press just to her right-hand side as they head towards the exit, and they head towards this car. Next, she will go to see the King, and then Rishi Sunak will be going to see the King, and he will be asked to form a new government. This is Bloomberg.
Politics. From the White White House to the Hill, Bloomberg covers the leaders in legislation.
That was really a tectonic shift for this White House.
The theory of this bill, as I understand it, is there'll be a multiplier effect. How did Democrats mobilize specifically younger voters?
Bringing you the political news you need to know.
The president has made it very clear that this is a significant focus.
For the intersection of Wall Street and Washington, nobody covers politics like Bloomberg.
What do you think of when you think of a battery? For most, it's what we use to power devices for both work and play, and maybe even your car. Over the past few decades, they've gotten way more powerful, long-lasting, and affordable. But all of this is just a prologue to what the next batteries are going to do.
As we drive to an increasingly renewable power-driven grid, we also need to be able to store energy and release it later to cover those periods of weather intermittencies that are driving this new grid that we're in. It's a multi-trillion-dollar opportunity, and it's imperative that we figure out the solution here.
How we store energy on a massive scale is in many ways the central challenge of the fight to stop climate change.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become Chief Future Officer, like Marriott's Leni Oberg.
One of the most important things is looking around the corner.
Adrian Mitchell from Macy's.
We have to let go of the traditional legacy department store.
And Luca Zaramella at Mondelez.
We tend to believe that all consumers are equal. They are not.
Look for Chief Future Officer on Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Matt Miller in New York and Anna Edwards in London. Now keeping you up to date with news from around the world, here's the first word. The U.S. won't change its stance toward China as a result of Xi Jinping seizing more power. Advisors are still trying to set up a meeting between President Biden and the Chinese leader. At the conclusion of the Communist Party Congress last week, Xi installed allies in top posts and paved the way for a third five-year term. NATO is increasingly concerned that Russia's desperation over battlefield failures in Ukraine may lead the Kremlin to escalate the war. That could involve a massive attack on a target like a dam or even a weapon of mass destruction. NATO says that for now, there's no sign Moscow is actually preparing for such an attack. Bloomberg has learned that Adidas is to sever ties with Ye, the rapper formerly known as Kanye West. Ye has been facing growing fallout from recent anti-Semitic remarks, including a tweet that resulted in Twitter suspending his account. The Yeezy line has been one of Adidas's most successful footwear collaborations ever. An instant messaging service, WhatsApp, has suffered a widespread outage. Almost 70,000 users reported disruptions, including not being able to send messages or connect to the server. Some of those users now say the service is working again. WhatsApp is owned by Meta Platforms, which of course will be reporting earnings, so what a day for an outage like that to happen. But Matt and Anna, we have confirmed that our group chat with our show is working, so at least there's that, Anna.
Yeah, absolutely, Kaylee. At least we're all in touch. So that's, yeah, small mercies. But yeah, it was down for a while. Seems to be coming back. News you can use here on Bloomberg Television. Coming up on the program, we'll get back to more serious conversation around the markets with Alberto Gallo, Andromeda Capital Management Chief Investment Officer and Founder. He will join us shortly. This is Bloomberg.
biggest challenges for General Dynamics, and what are the biggest opportunities?
So I think in any business, the challenges are solving complex problems that come to you. You know, the problems that come to me and my senior leadership team for resolving tend to be highly complex and nettlesome. So your ability to solve those complex problems are an important element, I think, of the value that we add to the company. And then I think opportunities, you always want to make sure that you've got a creative enough mind, an open enough mind to be able to see around square corners. What am I missing? You know, the why questions are really powerful. Why are we not doing this, or why are we doing this? I ask those questions a lot, and in the answers, you can sometimes tease out some real opportunities, some hidden things. But thinking creatively about opportunities and problems is really important.
And what about the industry generally? Do you think they have big challenges now as the defense budget probably comes down a bit?
So I think that we are all responsible, and we have an obligation to find the latest and best technologies that we can for our customers and deliver them in the most cost-effective manner we can. And I think that that's a challenge and an opportunity for all of the big defense companies.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Rishi Sunak formally becomes the UK's Prime Minister today. He faces an economy that's growing worse and a Conservative Party that's increasingly divided. Major banks surprise. UBS and HSBC report better than expected profits. And tech giants struggle. Microsoft may post its slowest sales growth in 5 years, while Alphabet's ad business is getting squeezed. Welcome back to the programme. I'm Anna Edwards, live in London, in Westminster, in fact, tracking the UK political story with Matt Miller and Kaylee Lyons, firmly with their eyes on the markets and corporate earnings back in New York. And Matt, in terms of the US futures picture, it's actually been deteriorating a little bit over the last few hours.
Yeah, it has been coming down a little bit, although it's only off about 1/3%. We're awaiting a ton of earnings today. Kaylee may have mentioned it, $5.7 billion.
Trillion.
$5.27 trillion. $5.27 trillion in earnings coming out today. We've got General Electric, General Motors, Coke, and a number of others coming out before the bell, after the bell. Microsoft and Alphabet, we'll talk about those. Futures down 1/3%, although we were up more than 1% again yesterday in the cash trade at almost 3,800. So we're getting back to those levels. The U.S. 10-year is coming down as investors buy that debt. 418.37 is the level we see right now, but it's come down pretty drastically from well over 430 just a couple of sessions ago. NYMEX crude, another red arrow today, and we've seen red arrows quite often at the beginning of the session. We turn around typically later in the day, and we still hover around the same price, 83.53 a barrel for West Texas Intermediate. Brent trading around $92, $93 a barrel right now at the global benchmark. And then Bitcoin, speaking of staying the same, this price hasn't changed, it seems like, since before June, $19,270. So we're off about 0.5% today, but we continue to hold in a level. When we have volatility in everything else, as we've been talking about for weeks and weeks now, Kaylee, Bitcoin just continues to remain the same.
Yep, and of course we'll be talking more about that on Bloomberg Crypto later today, so definitely tune in for that. Now, as for what else I'm watching other than crypto today, I'm keeping an eye on those Chinese technology stocks that are listed here in the U.S. because, as we know, Monday was a really, really horrible day for those names. They were each down about 12 to 13% when it comes to the likes of Alibaba or JD.com, but a little bit of a rebound taking shape this morning. They're each up in the ballpark of 2 to 3% in pre-market trading. And as Matt mentioned, huge day for earnings today. Among the companies that will be reporting includes Alphabet. Alphabet, for its part right now, in pre-market trading before those results after the bell, down about 0.1%. And GM also will be reporting before the bell this morning, and it is down about 0.6 ahead of those results, Anna.
Let's have a look at where we are on European stocks then, Kaylee. And just as US equity market futures have been deteriorating, so sentiment around European stocks has been deteriorating as well. A little bit of weakness was the story around, there we go, we're pretty flat, aren't we, on Euro stocks, on the European stocks 600. In terms of corporate individual stories, a few really good ones to focus on. Adidas in focus, Adidas down by 3.6%. This after our reporting suggests that the company is going to end its partnership early with Kanye West, or Ye as he's known now. It was due to end in 2026. This would also follow on the back of Gap and Kering and Balenciaga and others cutting ties with the rapper early because of offensive behavior on Twitter and other platforms. So that's the share price reaction there. HSBC down by just shy of 8%. Loan losses more than estimated, this in China and the UK. A change of CFO also making the market a little bit nervous. Our colleague over at Bloomberg Intelligence, though, on the banking sector, surprised at just how much weakness we're seeing in the share price today, given the help from net interest income. Also being helped by net interest income are profits at UBS. They came in better than estimated. That stock up by 4.2%, and that helped to offset the lower client activity that we've seen in wealth management over at that business. Let us talk about where we are in these markets and overall risk sentiment. Alberto Gallo joins us, Andromeda Capital Management Chief Investment Officer and Founder. Alberto, really nice to have you with us. I'm in Westminster today, keeping an eye on what's going on in UK politics as we wait to hear from new, soon-to-be Prime Minister Rishi Sunak. He's going to be speaking in around an hour's time in Downing Street. We've followed the UK crisis, of course, the LDI crisis, that liquidity crisis, hedging by pension funds, getting the gilt market into a mess that had to be unwound by the Bank of England, or helped at least by the Bank of England. You say that that's just the starter, that's just a glimpse of what's to come. And where do you expect to see that kind of tension elsewhere?
It's going to be very difficult for the new PM to solve the UK's problems. They're very deep-rooted problems. Debt to GDP is going above 100%. Household debt is very, very high. And government policies have not helped with anything structural in the past few years. It's only been a kick-the-can type of policy. So I really doubt that, besides a bit more credibility, I really doubt that the new PM is going to be able to do a real U-turn in what has been a very short-sighted, policy mandate by the Conservative Party over the past few years. So, we continue to see weakness in the UK and in cable, in sterling over the coming months. And unless there is a very, very strong U-turn towards structural policies. And we will see more weakness across retail, across consumers. The cost of living crisis is real.
So does sterling get back down to parity?
Ultimately, it can go down to parity, yes, or very close, yeah. We don't think the Bank of England has the willingness, but not even the ability to defend its currency.
Well, and of course, the Bank of England would like to maybe defend its currency, but more than that, it would like to get inflation down. Same with central banks really around the world, Alberto. How much success do you think they will have in doing so? Where can inflation realistically get down to?
Well, the UK has a special problem, which is that 50% of goods are imported. 70% of fruit and vegetables is imported, for example. So if the currency depreciates, that feeds through inflation much more easily than in other countries which have a higher percentage of production. And so the feedback is a lot more acute in the UK. And so, the Bank of England has already made the big mistake of pretending that inflation was transitory for a long time. And next year, we're looking at, double-digit inflation expectations. Some say in the high teens. So that's very hard to repeat. The Bank of England should be at an interest rate higher than the Fed already.
Unfortunately, it looks like we're losing sound.
Alberto, we're having a little bit of...
Yeah, we're having serious problems there with the feed. We'll try and right that. We're talking with Alberto Gallo right now of Andromeda Capital Management. It seems like we're having some slight technical difficulties. I'm not sure if we're able to fix those somehow in Master or if it's a problem with the internet. I know WhatsApp had an outage today, so maybe we're looking at other technical problems in the UK. Alberto, why don't we try again? Can you hear me properly, and can we hear you, I guess, most importantly?
Yeah, that's right. So, we do think that there's going to be more downside in the UK, and we do think that the Bank of England's interest rates should be already higher than where the Fed is. And they've made a big mistake of pretending inflation was transitory. And there's a large feedback loop in the UK because 50% of goods are imported. So we think that the Bank of England is way behind the curve, and they're not going to be able to catch up anytime soon. And if they do, then there's going to be a credit crunch in the economy. So it's very much a lose-lose situation for UK policymakers today.
Okay. Alberto, that all sounds very gloomy. I mean, global equity markets seem to be trying to turn some kind of corner, keep jumping on any talk of pivots by the Fed. Maybe that's premature. Yes, they get led off course by weakness in Chinese stocks and then try and ignore that kind of global weakness, Alberto. But you think any signs of positivity, is that just a sort of bear market rally? And then from what you've said, you expect further weakness ahead?
We don't think there's a Fed pivot in sight, but there are some things that can go right. One of them is a diplomatic solution in Ukraine, for example. So where do we see upside? Is in areas where there's already a recession priced in. For example, in the Eurozone, there is a recession priced in. Valuations for equities are very low, and valuations for corporate bonds are very wide. So, credit spreads are, above 6%. They're pricing a high default cycle in Europe. And, in this environment of state capitalism where governments are helping companies but also raising taxes, we think credit and bonds are actually a better play than equities because, upside is capped by higher taxes, but also downside is capped by bailouts and sovereign help to companies. So we prefer to look at credit, which now gives you double-digit yields on very good companies, capital structures, rather than going into equities, and we like Eurozone risk.
Okay, Alberto, thank you very much for your thoughts. Alberto Gallo of Andromeda Capital Management, thank you. That could be pertinent to our next conversation. How much will the new UK government want to go after corporate profits? Maybe that's one way to fix the books. We will talk about this more broadly, though, in terms of the politics. Rob Ford joins us, University of Manchester, Professor of Political Science. That conversation next. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards, live in London, in Westminster, with Matt Miller and Kayleigh Lyons, both at base, of course, in New York. Let's talk UK politics. Rishi Sunak is expected to keep Jeremy Hunt as Chancellor of the Exchequer, we understand here at Bloomberg, as he seeks to calm markets. The incoming Premier will formally take over from Liz Truss following a meeting with King Charles III a little bit later today, in fact, almost now. Joining us now for more is Robert Ford, University of Manchester Professor of Politics or Political Science. He joins us now. Really good to speak to you, Robert, today. Can I first start with the big picture, cultural picture, I suppose, around what it is that Rishi Sunak represents, because he's sort of something very new, but also old. So he's something very new. He's the first British Asian Prime Minister here in the UK, which, of course, is of interest to many. But he does also represent the establishment, a very establishment background in terms of his education and then where he was employed and his sort of mainstream background in financial services. So what do you think he represents?
Well, you're absolutely right. The first minority ethnic prime minister since Benjamin Disraeli, but also Winchester College, and then PPE at Oxford University, followed by a career in the city, which really sounds like Conservative Party central casting as much as anything. So very significant first on the representation front. But the interesting thing I think about that is that actually it just really hasn't been a particularly salient factor in discussion of Sunak, whereas his background and in particular his family's wealth and their tax arrangements have been a significant factor in his past discussions. In fact, the main setback he's had in a fairly gilded political career came when his family's tax arrangements came up, and in particular, if I recall rightly, the fact that his wife still had non-dom status even while he was Chancellor of the Exchequer. And I think that's significant because firstly, it means he doesn't start with the kind of halo he might have had as a result of his policies during lockdown, but also it does mean he's going to face a little bit of an uphill struggle with voters who don't generally mind if people are wealthy and privileged. We saw that with Johnson, who wasn't exactly lacking in privilege, but they do mind if they think people are fixing the rules for themselves. That's when a background of privilege becomes problematic.
Okay, and we certainly saw his wife give up that non-dom status, I remember, and start to pay tax on international income, just to complete that story, which you were rightly telling us. What about democratic legitimacy? I should also apologise for the noise of the helicopters, Robert, if you're having trouble hearing me, but that's what you get in Westminster. What about democratic legitimacy? Clearly, we're handing over midway through a parliament. That's been done before. No matter how much the opposition doesn't like it, it is within the rules. Is he going to have to stick to the 2019 manifesto? That's going to be very difficult if we're going to be embarking on a new period of austerity.
Well, I think there are different ways of answering that question. In terms of public opinion, I think that every time there's a transition of prime minister midway through a term, and obviously we've had a few of them lately, this gets raised, and obviously opposition parties will always say they won an election, but the truth is voters don't particularly care about this. It's a lot of fuss over not very much in particular, I think. But it does matter at an institutional level, in particular because the Salisbury Convention with regards to the House of Lords is that the House of Lords won't block anything that governments try to do if it was in the manifesto at the last general election. That was a particular headache for Theresa May after she took over, and one of the things that helped to encourage her to call an early election. Now, I don't think that's as likely to be as big a problem for Sunak as it was for May, in particular because the kind of economic crisis we're facing, I don't think the Lords are going to want to be blocking policies that seek to address that crisis. I think the bigger problem for Sunak, which isn't particularly related to his electoral legitimacy, so to speak, comes in the Commons, which is the circumstances in which he's become Prime Minister are in part a reflection of a deeply divided governing party. So far in the past few years, we have seen essentially no evidence that Conservative MPs are willing in a majority to do anything painful. They're not willing to back tax rises. They're not willing to back spending cuts. They're not willing to back planning reform. They're not willing to back fracking. They're not willing to back onshore wind. They're not willing to back solar and so on. But what we know of the next 2 years is that a lot of painful things are going to need to be done. And I think the great big open question over a Sunak prime ministership is, where does he get 330 votes in the Commons from? Where does he get his majority for policies which are not going to be popular, which are going to hit particular kinds of places hard, which are going to run against the instincts of at least some of his MPs? Because ultimately, his predecessor very quickly discovered that she didn't have a majority for what she wanted to do. Boris Johnson actually had to retreat from an awful lot of policies because there wasn't a majority for them either. Well, where does Sunak get the votes?
Can Labour be happy about that, Rob? I mean, does this mean that Labour will have an easy time of it as the Conservatives get nothing done until the election?
Oh, yeah, absolutely. If you're the opposition and you face a situation where the incumbent government is quite likely to either have to pass into law things that voters don't like or argue like rats in a sack and get nothing done, I mean, it's win-win, isn't it?
It is.
All right, Robert Ford of the University of Manchester.
Thank you very much.
Thank you so much for joining us. And of course, Anna, we wait for events later today when we'll hear from Sunak himself after he meets with the king.
Yeah, absolutely. 11:35. So in around 45 minutes time, we'll be hearing from the new Prime Minister, as he will be then. Coming up on the Balance of Power, Council on Foreign Relations President Richard Haas will be speaking to the Bloomberg team. That's at 12 p.m. in New York, 5 p.m. in London. This is Bloomberg.
When I started, I had no idea it was going to turn into this, which is a tracksuit empire. I don't have any investors. All this is all money in. This is me going out and hustling, bringing that money back, and just building it, building it, building it. You gotta think about a person that was homeless at one point, didn't really have any money coming in. The fact that this person was relentless and just determined to succeed and not let rock bottom define him as an individual. I can take things and put them together and take them apart and make them better and put them back together. I respect the craft, so I don't want to minimize and disrespect the value of each step of the craft and do by machine what should be done by hand.
Hello, I'm Emma Barnett, and I'm a journalist and presenter. This is my new show, Emma Barnett Meets. First, I'll be meeting Chinese artist and dissident Ai Weiwei, and I'll talk to the novelist and political scientist Elif Shafak. Tune in to watch those who shape our world explain how the world shapes us. This is Emma Barnett Meets on Bloomberg Quicktake.
Likely have a recession in the U.S. Going to have, I think, most likely a recession. We might be in a recession in Europe. And so until you get to that point that you see a change, whether it's in labor, the demand side, you're going to see central banks continue to move on that trajectory.
they'll take a pause at one point. Conditions around the world to tighten. It's rational to take a pause because any 3 months doesn't matter that much. But American consumers, eventually the excess money they have is running out. That'll probably happen sometime mid-year next year. And then we'll know more about what's going on with oil and gas prices and all that kind of thing. So we'll find out.
JP Morgan CEO Jamie Dimon and Goldman Sachs CEO David Solomon speaking at Saudi Arabia's Future Investment Initiative Conference in Riyadh. Now let's take a quick look at what is coming up today. The Future Investment Initiative, which we were just hearing from, is seeking to attract billions of dollars to Saudi Arabia, which of course is taking place in Riyadh. We'll also be hearing from Fed Governor Christopher Waller, who will be speaking at 1:55 p.m. Eastern. Plus, tech earnings kick off with Microsoft and Alphabet reporting after the bell. And before the bell, General Motors will be delivering its results at 6:30 a.m. New York time. For more on GM, we're joined now by Bloomberg's global car czar, Craig Trudell. And Craig, I guess what we all want to know with GM is, are they as pessimistic as Ford, which last month warned of a $1 billion hit due to inflation?
Yeah, that really sort of spooked the markets a bit, and I think sort of set the tone for the earnings season for automakers. I mean, a real concern about how much inflation within the supply chain is going to continue to drag on these companies. Up to this point, we've had real impact in terms of production constraints, semiconductors being a big one, and now that the industry is starting to work through that a little bit, the progress is still slow, and there's costs of everything from other components because of raw materials to even shipping and the challenges of moving cars around, which is something that we heard Tesla talk about last week. So the extent to which Mary Barra is able to sort of address those and make a case for whether or not GM will be able to handle this better than Ford has.
Yeah, of course. I'm going to be speaking with Mary Barra a little bit later, 8 a.m. New York time. I'm going to ask her about the pressure on margins, if she sees that, and whether that's going to affect the amount they're able to invest in EVs, because it still is a situation in which they kind of have to subsidize EV sales, right?
Absolutely, and next year's going to be a really pivotal year for GM, where you have, the Chevy Equinox, the Chevy Blazer, Chevy Silverado. All of those, there will be electric versions of those coming out next year. So it's going to be a really busy launch year. That means, generally more costs. It also is the case that these are, generally coming in at much lower price points, maybe with the exception of the Chevy Silverado. GM really trying to make a push into more sort of mainstream, more mass market price electric vehicles that you haven't necessarily seen from them aside from the Chevy Bolt up to this point. When you look at the Hummer and some of the Cadillac models that are electric, these are really expensive low volume vehicles, and so the extent to which you see inflation, particularly on the raw materials for electric vehicles, is going to be a concern for them going into next year. And I think another sort of big area of focus is going to be lending, right? So you have GM Financial being potentially impacted by some of the things we've heard from the likes of Ally and CarMax recently. Lower used car values really pressuring earnings of these lenders.
Absolutely, and of course, higher rates, a focus there as well for that business. Craig, thanks so much for joining us. Bloomberg's Craig Trudell, our global car czar. Again, I will be speaking with Mary Barra, General Motors CEO and Chairman, at 8 a.m. New York time. I'm going to join the surveillance team for that. They're up next. Lisa, John, and Tom will join you with Nouriel Roubini, Dr. Doom, on the program today. This is Bloomberg.
So as you look back on your career, what would you say is the best investment advice you've ever received?
Probably the best investment advice that I never received, but that I've lived my whole life around, is surround yourself with really good people. I thought about it just today, like I do many times, you know, what makes a great investor? A great investment firm is comprised of people who are optimists and pessimists and realists. Because in the intersection of the debates that go across that wide range of personalities is where you find truth. It's part of the reason I'm so focused on freedom of expression. I see it in my own four walls, the robust and fulsome debates around how we commit our capital, what defines a good idea, what businesses to build or pursue. That's what drives the success at Citadel. And I've been very fortunate in life to have always had a group of friends who really push me, who make me better. And here I get to work with 3,500 colleagues who in their ways make me better each and every day. And collectively, as a team, we've had the opportunity to have an incredible impact on the financial landscape around the world.
From the world of politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays, this is Bloomberg.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology.
Welcome to Bloomberg Crypto.
The day-to-day volatility has been mind-boggling. Traders here are whiplashed, and I think that's true of people across the markets.
We do think we'll begin to see some moderation in inflation. It's clearly been surprising to the upside month after month.
I think investors are waiting for the other shoe to drop.
Have the markets seen their bottom? We're all talking about the risk of recession, but markets still, to me, don't have it priced in.
The market is back in charge here.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Equity futures negative TK by 0.4% today. All about big tech earnings kicking off later after the close.
Big tech earnings. I know Rishi Sunak, when he's got some free time today, is going to look at his Microsoft shares, his Google shares, and say, I got to stop tonight about 8 p.m. his time and look at that performance. It starts today. We roll on to Thursday, which is one of the busiest days of the year.
Did you see HSBC coming out over in Europe out of London?
Yes,
Loan loss provisions are moving in the wrong direction. Higher.
And they are a China subset, and I read every word of our report on HSBC, and you really wonder if that's what's coming down the pike. The follow-on from a China with 3% GDP.
Chinese equities yesterday got absolutely hammered, and this morning again, Lisa, renewed currency weakness for China.
How much is this going to really influence the policy? We were talking about this yesterday. This isn't going to necessarily be the check that it was on the United Kingdom, simply because Xi Jinping doesn't seem to care as much about the market response. Still, I do wonder what businesses are going to do. I mean, does HSBC continue to double down in China, or do an increasing number of companies start moving away because it just isn't necessarily economically sound?
The TK 736.40. What do you make of that? Dollar CNH right now, 736.40.
I just brought it up, and it's well outside 2 standard deviations. Let's review this. Is it fixed? Is it floating? No, the currency is managed around a band. And right now, we are definitely unmanaged on the Chinese currency. I'm going to go, John, right now to a log axis here.
In real time.
On China. In real time. You can do that in the Bloomberg terminal. Beautiful. And there's convexity in China. There's an acceleration here of yuan weakness.
Are we selling terminals today?
We're selling terminals today.
Good
That's
to know.
what we're doing.
Let's get to the price action this morning.
Mike,
good morning to you, and good morning to the sales team here at Bloomberg as well. Equity futures look like this on the S&P 500. Big tech reporting a little bit later after the close. Futures negative 0.4% on the S&P. We're down about 15 points. Yields lower by 5 or 6 basis points, 418.37. The euro still stuck beneath parity, 98.65, negative 1/10%. And in a moment, Tom, we'll catch up with Jordan Rochester. He's looking at dollar yen potentially 160. 160 was the number in his note this morning.
Yeah, everybody recalibrating there. I thought, and Sarah Vellis later on from Deutsche Bank, it's going to be interesting here to look at that, I'm going to call it idiosyncratic story, but folded much in with Jordan, John, is sterling a 113.18. And as we go to the Sunak speech here in 30 minutes or so, it's a massive now what for the United Kingdom.
We'll keep an eye on that in about 25 minutes time, 30 minutes time. Looking at crude, 83.30 on WTI. Lisa, negative 1.5% today.
I think it's fair to say that the week starts today, right? I mean, this is a massive week, and today we start with the tech earnings as well as a number of economic data points, including some of the house pricing data, the S&P CoreLogic Case-Shiller Index coming out at 9 a.m. along with some FHFA house price data. How much do you see a rollover in house prices, and how quickly does this bleed into rents? Yesterday, John, we saw rents start to come down actually quite significantly, but it's not going to trickle into the CPI for kind of quite a while. So at what point does it matter to the Fed? At 1 p.m., we get the U.S. selling $42 billion of two-year notes. Who shows up, right? I mean, we're seeing those yields continue to climb. Can we breach that 4.5% and sell it at that level? And how many people start piling in because perhaps this is the peak, as we heard yesterday? Some are speculating. And today, the earnings after the bell include Microsoft and Alphabet. Microsoft is expected to see the slowest growth in sales going back to 2017. Alphabet, I'm arguably more interested in, John, because that's the advertising tell, right? That's the Snap other side of the story. Are we seeing advertisers start to pull back? Could that be a sign of some kind of broader trend in the economy?
Elisa, thank you. Looking for the earnings a little bit later. Getting earnings right now on UPS. Here are some of the numbers for you. Revenue in line. EPS a beat, Tom, for the third quarter. 296 versus 265 year over year. The estimate was 285. Adjusted EPS coming in at 299. Reaffirming the outlook as well, Tom. Reaffirming the full year outlook this morning.
And this is important again on a logistics basis, a national basis with Federal Express is, well, Julian Emanuel has his revenue modeling right now up 8.8% revenue. That's that inflation-induced revenue growth you're seeing at corporations. That's a big number.
Looking forward to GM a little bit later, Tom. Really want to find out what the tone is of this auto market in this country. Given what's happening with interest rates right now, Tom, can you imagine going out and buying a new car? How much that's going to cost you?
Well, I think the interest rate story is profound. Enda Curran with us later has a global story on what the interest rate impact is on central banks. The interest rate impact on that car is a 3-year depreciation, maybe a 4-year depreciation. And we haven't even talked, as Lisa just alluded to a 7% mortgage. What does that do in America?
And for autos,
what's it in the United Kingdom? I don't
Tom,
even
it's
know.
a problem for autos, though. Specifically, I wonder if we go from undersupply to oversupply, just like that, in a space of 12 months. That's something UBS indicated potentially just a few weeks ago.
We don't talk enough about it, but this is the David Rosenberg theory. There is a camp with Mr. Rosenberg of Toronto that you're going to see a rapid path to disinflation. We saw that not once, John, but twice, 1947 to 1953. Stochastic, up you go, inflation, gloom, down you go.
Looking forward to those numbers a little bit later this morning, and Matt Miller's going to catch up with the CEO of GM later on in this program. We're going to catch up with Jordan Rochester now, the G10 FX strategist over at Nomura. And Jordan, I teased it a little bit earlier, a few minutes ago. Let's go there. I saw the number 160 and dollar-yen next to it in your note. Walk us through it.
Well, that wasn't my view, John. That was the view from clients. So it was this time last week on Monday. I was sat next to you guys in that table. So we met clients around the New York area and Connecticut as well. And we're looking for 155 at Nomura in dollar yen. I think after this Bank of Japan intervention, what you've clearly seen over the past, let's say 12 hours, is extreme lack of volatility now. We're in a 40 pip range, where the previous 2 weeks we've been a big vol higher in terms of that march up to nearly 152, then that near 6 yen swing down on that intervention on Friday, done during New York hours when liquidity was very thin, and just after that Wall Street Journal article talking about the Fed becoming perhaps a bit more dovish in terms of when they will slow down rate hikes. So I think we've had some temporary setbacks for that long dollar yen trade, but the fundamentals are still pretty clear, John, that the US interest rates are rising, the Japanese are not. That is your long dollar yen carry trade. But for me, on the fundamental side, from the trade side, the dollar yen is likely to keep rising from Japanese importers this winter, going out and buying LNG, buying coal, buying oil. Even though energy prices are cooling down, seasonally as we get into winter, those purchases of LNG should accelerate, pushing dollar yen higher towards 155.
Jordan, I've had the honor of a formal tea at the Bank of Japan with all the pomp and circumstance. It's different than the Fed folks. At the Fed, you're over at Starbucks and you're paying for it. That's how they do it in America. Jordan, give us an insight on the debate at the Bank of Japan. Is it Kuroda-san only? Or is there actually a debate there like there is at BOE or at Fed?
There's definitely a debate. Kuroda is, of course, representing the rest of the Bank of Japan when he speaks on their behalf. But he is also the guy in charge. And when we get to March and April, the question for clients is, Kuroda's term comes to an end, who will be the next to lead the Bank of Japan? And will that lead to policy change? And if you look at rates markets would tell you, yes, we think that something will change, at least on the 10-year part of the curve. Will the bands be wider on the yield curve control? Will they give it up altogether on the 10-year, move it to the 5? If you look at the Japanese JGB curve, even tenors below 10 years are trading above the sort of levels set by the 10-year yield curve control. So the markets are challenging the Bank of Japan as we speak. They're holding on to their 10-year, but the rest of the curve is pricing a change in policy to come.
And is the message so far for this year, Jordan, that currency vigilantes will win? That we're seeing that when it comes perhaps eventually to Japan, although it hasn't happened yet, and that it has come already to Great Britain, where you see a little bit more upside, at least versus where you used to with the pound?
Indeed. Well, for the yen, it used to be everyone's risk-off hedge of choice. The only clients I've met who are long the yen are using it in their portfolio as their potential risk-off in case we get dollar weakness. And as you've seen over this past year, that just hasn't worked. The fundamentals really did change for the yen compared to the global financial crash. The carry trade still drives the pair. It does track US yields quite well. But on the trade side, now of a trade deficit, it's not your risk-off currency of choice when this is a risk-off driven by energy prices. And then for the UK, I think the UK is the canary in the coal mine for everybody around the world, even for the US, for Janet Yellen, for the Fed. You don't want to do a UK, seems to be the conclusion from talking to foreign policy makers. When it comes to budgetary constraints, don't push it. And also when it comes to interest rates, don't suddenly get dovish and allow inflation to run hot. I know we were just talking about the previous section, used car prices. I think they will continue to fall, perhaps quite aggressively. But labour markets are really tight, and the risk now is the second round effects for services. And that's a lot harder to tame that inflation dragon. So I think for the time being, the Fed's going to do 75, then they'll do 75 again, then slow down into the new year. That Wall Street Journal talking about the idea of perhaps slowing down to 50s come December. That's the debate for the dollar right now. That's why euro and cable have become quite boring to trade, just that everyone's waiting for this Fed meeting next week.
Yeah.
But I think the message will be, no, we're going ahead, we're still staying hawkish, and the dollar will rally into Christmas.
And then waiting for the CPI print the week after that. Jordan, awesome to catch up, buddy, as always. Jordan Rochester there of Nomura. Jordan was talking about dollar yen there and the intervention from the Bank of Japan. The team here at Bloomberg broke down the data. 4/5 of the weakness in the Japanese currency this year has come outside of Japanese trading hours. And that's why the intervention from the BOJ, Tom, is coming, guess what? Outside of Japanese trading hours.
It's just completely clumsy, and it comes back to core theory. And I guess some people can support their core theory, but most people are saying, you got to be kidding me. One thing Jordan mentioned there that's absolutely critical is everyone's looking at liquidity within the system, using United Kingdom as the example, and the FRA OIS, much akin to LIBOR OIS of another time in place, is spiking up and is right at the moving average from the pandemic level.
Jordan said FX has got boring. Ramo, boring?
No, I don't think that anyone's going to accuse it of being boring.
Dollar. Maybe it's boring now relative to what we've seen over the last few months, in fact, the whole of this year. Coming up, Jean Bavin of BlackRock. Looking forward to catching up with him in the next hour. A comment from him on the midterms and the importance of it in about an hour from now. Looking forward to that conversation. Live from New York City this morning. Good morning. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. In the UK, Rishi Sunak spent the summer predicting that Liz Truss would trash the UK with her plans if she became Prime Minister. Well, now his prize for being right is a chance to fix the damage Truss caused. Sunak will meet King Charles III today to formally replace Truss. It's a rapid turnaround for Sunak, who lost to Truss in the race for the job. Bloomberg has learned that Adidas plans to end its partnership with Kanye West. In recent weeks, the rapper and designer has made controversial statements, including anti-Semitic posts on social media. That's turned his Yeezy line into a lightning rod for criticism. It's estimated the brand has accounted for up to 8% of Adidas' sales. The U.S. won't change its stance toward China as a result of Xi Jinping seizing more power. Advisors are still trying to set up a meeting between President Biden and the Chinese leader. At the conclusion of the Communist Party Congress last week, Xi placed allies in top posts and paved the way for a third 5-year term. NATO is increasingly concerned that Russia's desperation over battlefield failures in Ukraine may lead to the Kremlin to escalate the war. Now, that could involve a massive attack on a target like a dam or even a weapon of mass destruction. NATO says that for now, there's no sign Moscow is actually preparing for such an attack. An instant messaging service, WhatsApp, says it's fixed an issue that's caused a widespread outage. Tens of thousands of users reported disruptions, including not being able to send messages or connect to the server. WhatsApp is owned by Meta Platforms. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
What do Formula One cars and your local supermarket have in common? Well, strange as it sounds, they might both be using the same technology. A lot of innovation has trickled down from the world of high-tech engines, and it hasn't just found a new life in road cars. F1 cars have long been thought of as the peak of cool, and technology in them is also helping to cool down our produce aisles. Engineers from Williams are using their knowledge from 9 Constructors' Championships, working with company Aerofoil to help reduce the energy consumption of supermarkets. The device they're building is based on the design of an F1 car's rear wing. It attaches to fridges to keep more cool air in the unit. They estimate it can reduce supermarket energy consumption by 25%. One innovation from F1 is also helping hybrids reduce their carbon footprint. That's KERS, or the Kinetic Energy Recovery System. In common parlance, it's known as regenerative braking and works by storing energy of the car decelerating in a battery for later use. If that's not enough, F1 is now looking at TERS, or a thermal energy recovery system, looking to harness the heat produced from braking and the engine exhaust. That could allow cars to generate the same power using 30% less fuel. So while F1 may have a reputation as a gas guzzler, some of its innovations in the name of speed are helping in the everyday fight against climate change.
The difference between endless research and a winning strategy. To improve your firm's productivity and profitability, Bloomberg Law combines the latest in AI-powered tools and in-depth analysis to accelerate the research process. To grow your practice and make better use of your valuable time. The difference is Bloomberg Law.
business is you get to build things from nothing.
I don't have any investors. All this is all money in. This is me just building it.
It's pretty much full-service shadow banking with nobody in charge.
Season is here.
The earnings are starting to pour
The
in.
numbers are holding up better than expected.
Sorry, business isn't all that bad.
Bloomberg breaks the numbers first.
Netflix earnings going to cross the wire.
A big beat. Stock is up more than 8%. Coming in stronger than their rivals.
With exclusive expert analysis.
Finally back to growth.
The mother of all opportunities.
What is the industry to watch? That's where the rubber hits the road for Goldman Sachs.
It's going to be a really interesting earnings season.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
I can't think of a more consequential election that I've been involved in, and we've been involved in. You know, whether we maintain control of the Senate and the House is a big deal. And so far, we're running against the tide, and we're beating the tide.
2 weeks away from the midterms, the President of the United States. Live from New York City, here's the price action this morning, and good morning to you. Your equity market is slightly negative on the S&P 500, coming off the back of a big day of gains on the S&P. A day of gains of more than 1 full percentage point to kick off the trading week. We're down about 0.5% this Tuesday morning. Yields are lower by 6 basis points, 417.95 on a 10-year. Euro dollar negative 0.1%, 98.67. And before we get deep into US politics, UK politics, in about 15 minutes from now, Tom, we should hear from the new Prime Minister, Rishi Sunak.
The play here is he won't be surrounded by supporters of that. It will
As
be
far as I understand,
solitary and alone. What's your take on this moment, John?
On this particular moment,
This
I think
moment,
it's going to be
3 prime ministers and 3 cups of coffee.
very difficult to implement austerity in a cost of living crisis in many places around the world.
Interesting. Well, we'll talk a lot about this. Lizzie Burden, I know. Lizzie's at 10 Downing Street.
I believe we're catching up with Lizzie in about 10 minutes, yeah.
Very good. Right now, we will catch up with Anne-Marie Horton in Washington. We are 2 weeks away. It is Tuesday. 2 weeks away from an election. Anne-Marie, I got 18 ways to go here as the political elites go back and forth. And what I sense out here is a measure of apathy. Give us your summary of what turnout looks like and the character of apathy in both parties.
We look at a lot of the polls, and you could see that more than 50%, a lot of them say that they intend to go out to vote. They want to go out to vote. When you think about apathy, there does seem to be a sense from voters that there is this frustration when it comes to the economy right now, and that continues to show up in every single poll across the board, whether it's a question on the economy or inflation. Those are the top priorities. The issue is there's not a lot the government can do to fix that right away, right? The Democrats constantly say this is a global issue. That is true. They try to back away from some of the legislative measures they took that maybe the Republicans say added to inflation. But overall, the world is dealing with inflation. This is something that is difficult for the current administration to try to defend, even though they are doing that. But when you think of apathy, that's where it's coming from. How can the government impact my life? And this is what I'm struggling with. And across the board, it's gas prices, it's grocery bills, and it's paying for housing and rent.
Do the candidates and the political experts, do they trust the polls?
It's a great question. A lot of people say you cannot trust the polls. President Biden yesterday, speaking at the DNC headquarters, says you cannot trust the polls because the polls have been wrong before. You were just talking about Rishi Sunak. The polls were wrong in the United Kingdom during Brexit. The polls have been wrong here in the United States. But at the moment, what you are seeing, and what is typical, especially for midterm elections, is that the polls they're getting closer and they're getting more narrow as we head into, the final 14 days. We should also note that a lot of people have already even voted, right? There's been early voting for weeks in this country.
It's been really difficult to balance the domestic and the international, Anne-Marie, but the international has really hung over everything when it comes to the domestic politics. How much, what do you make of the fact that certain Democrats are pressuring President Biden to speak with Vladimir Putin at this tenuous moment 2 weeks ahead of the election?
It's an interesting moment because we also heard similar rhetoric regarding Ukraine from the Republicans. Last week, Kevin McCarthy, the Republican leader at the House, likely will be the next Speaker of the House if there is going to be a red wave in terms of the House, talking about there's not going to be a blank check for Ukraine, that there's not just going to be this constant funding for Ukraine while people are dealing with kitchen table issues every day and potentially going into a recession. Now you have progressives saying maybe we should start negotiating with Russia to make sure that there is a diplomatic path forward for Ukraine. The White House is saying there is not going to be any negotiations with Russia unless that is what Ukraine wants. They constantly say nothing about Ukraine without Ukraine. We should know that the progressives did come out and say we're not against what the Biden administration is doing, but they do want this path forward in terms of diplomacy. And that's as a number of issues are mounting on. What I'm looking forward to is in December, when there potentially needs to be more spending, whether it's military, financial, humanitarian aid, that the Biden administration is likely going to push for Ukraine. Is there going to be more pushback, not just from these Republicans, but also within their own party?
How much of this is also being driven just by the inflationary outlook and what's going to happen with gas prices heading into the winter?
It's a great question because, Lisa, what's coming up December 5th? That's when those EU sanctions are going to bite, which means it's going to be incredibly challenging. Even if you want to be able to accept Russian crude on the global oil market, you can't, because maybe the shipper or the insurance company comes from a European, which are dominate in this sector, whether it's a Cypriot or a Greek ship. It's going to be challenging to get this crude around, which is why you saw at the last G7 they discussed a price cap. That at this moment is a very contentious issue, because if they cannot get this price cap aboard and allow this Russian crude to flow, that means that this Russian crude is likely going to only stay in Russia, and there could potentially be shut-ins, and that is just going to elevate this price at a very difficult time. Jonathan said it yesterday, though. What they have going for them right now in Europe and even in the United States is the fact that it's an incredibly warm out, and potentially it's going to be a warm winter.
MH, thank you, down in DC. Let's pick it up right there. Hardly being talked about. Gas prices in Europe are down by more than 70% from the August peak. TK down by more than 70%, and today down by a couple of tenths of 1%, but to see them back at 99.
Is there why?
Back at 99.
It's warmer. Supply.
It's warmer and they've got
supply. It's the weather.
It's the weather and they've got the supply. They've got the storage up, to be specific. So they met their storage targets ahead of schedule. We broke those headlines along the way over the last couple of months. And then we started to hit some warmer weather as the cooler period started to click in, Tom.
It's October.
It's been a whole lot warmer.
We barely started the
Bear
winter.
in mind, Tom, that it can get pretty cold
in
parts of Europe, even in October. So that's the good news so far, and we'll see if that continues. But certainly that's contributed to a lower gas price in Europe over the last month or so.
Again, we mentioned Rosenberg earlier, and there's a whole school of thought here gaming out a sustained inflation, whatever the level is, whatever the country. And there's a lot of people saying the microeconomics of the system clicks in, and down you come to some form of disinflation that can surprise.
Certainly, Tom, about a month ago, I think we were all tremendously concerned about industry getting shut down, rolling shutdowns throughout Europe, rolling blackouts throughout Europe. And Lisa, now maybe you can park that for a moment. Got no idea if that starts to reemerge as a conversation in the weeks to come. But still, we need to have a conversation about next winter and the winter after that, and whether they can repeat the trick of getting that storage up to capacity where they want it to be in about 12 months from now.
So right now, one thing that I've been reading about is how there's almost a glut of natural gas in some of these storage units. So at what point do we start talking about how much of this has been priced into euro area valuations that have been completely beaten up?
Gas prices right now, 98 handle in the Netherlands, Tom. That European benchmark.
I mean, it's impressive. GE, the earnings aren't that good. We'll talk about that.
If you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
Power, policy, politics. From the White House to the Hill, Bloomberg covers the leaders in legislation.
That was really a tectonic shift for this White House.
The theory of this bill, as I understand it, is there'll be a multiplier effect.
How did Democrats mobilize specifically younger voters?
Bringing you the political news you need to know.
The president has made it very clear that this is a significant focus.
For the intersection of Wall Street and Washington, nobody covers politics like Bloomberg. Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
3 hours away from the opening bell, live from New York. Good morning to you. Your Tuesday morning price action looks a little something like this on the S&P 500. We're negative 1/3% after some big gains to kick off the trading week yesterday on the S&P. On the Nasdaq, we're down about 0.2%. This is how the bond market's shaping up. On Friday, we had a little look at 460 on a 2-year. This Tuesday morning, we're down another 4 basis points to 446.64. Let's stay on the front end and go over to the other side of the pond, to the UK. The gilt, the 2-year. The 2-year bond yield in the UK yesterday, down 37 basis
biggest
points.
Ever?
Biggest move in 30 years, I'm told, Tom.
Yeah, biggest since Wellington.
Big move lower, down another 4 basis points this morning. Rishi Sunak, the new Prime Minister, about to speak, Tom, in about 4 minutes' time. The attention then shifts from him, really, to the budget and then over to the Bank of England in about a week from now.
Your thoughts on this, and John, I'm going to go to what we've done with Draghi at Davos and all. Is this guy a technocrat like Draghi, or is there something different here in the political equation?
I think it would be wrong to call him a technocrat at this point, Tom. What's interesting to me, actually, at this point is whether the Chancellor is Jeremy Hunt and whether we actually get the budget in the way we thought we were going to get the budget at the end of this month and what that looks like. Do they go even further when it comes to spending cuts?
Further austerity.
Possibly,
We're going to go
sure.
to Lizzie here, but John, one final question. Where does Mr. Gove fit into this? Who is Michael Gove, and where does he fit into the formation?
It's probably a
of this
question
government?
for Lizzie Burden and Rishi Sunak himself, Tom.
You're reading this 24/7.
I'm looking at GM right now, coming in with EPS at 225 and the estimate at 189.
Yeah, pretty
Third
good.
quarter
GE was
adjusted
going
EPS,
the other
yeah.
way. But yeah, Mari Barra will join us later. Matthew Miller will be speaking to her. Let's do this right now. We need to go to 10 Downing Street. Lizzie Burden is there for this historic moment. There have been many moments. Lizzie, what will be the distinction today as he walks from the door to the podium versus when an optimistic Liz Truss walked to the podium weeks ago? What's the key distinction this morning?
To me, the key distinction between Rishi Sunak and Liz Truss is that he is a pragmatist, and he has proved that throughout the pandemic. He was actually accused of being a socialist, so generous were his pandemic support programs like the furlough scheme, and indeed he raised taxes to pay for healthcare, even though fundamentally he says that he's a tax cutter. And European leaders are going to be hoping that that pragmatism transposes to Brexit as well. But Rishi Sunak's really going to have to keep that in check on both taxes and Brexit if he wants to keep the Tory right on his side. And they're, along with the other MPs who've put him in power, not the party membership, not the public. And so that coalition is going to be fragile and crucial.
Lizzie, I know a lot of people on this side of the Atlantic that just want to stop talking about the UK and British politics. Let's get through the next couple of weeks. Do we get a budget at the end of the month? And when the Bank of England meets, will they have a deeper understanding of how much spending cuts we'll actually get from this Prime Minister?
Well, we've already heard from various Bank of England deputy governors in recent days, and they say that the Bank of England and the Treasury have already been talking, even though Rishi Sunak's spokesman will not yet confirm that the Chancellor is going to be Jeremy Hunt, although it looks increasingly likely, or whether the date is going to be October the 31st. But Rishi Sunak, more than any Prime Minister, would be aware of the effect of surprising the markets. And so you can probably expect that he's going to confirm who his Chancellor will be and what the date of that budget will be later this afternoon, along with the rest of the Cabinet.
Lizzie, how difficult is it for Rishi Sunak to issue cuts with respect to spending, given the fact that he is very wealthy, that he doesn't necessarily represent the mainstream in any kind of populist way?
I struggled to hear you, Lisa, there, but in terms of the difficult job that lies ahead for Rishi Sunak, even though he's had 2 runs at being Prime Minister, the characterisation in the national press today is that the easy part's over. Now the difficult decisions begin, but Labour leader Keir Starmer's already characterising it as austerity 2.0. It's very, very difficult politically. But the good news for Rishi Sunak is that he's always said that it was going to be difficult, that he's going to be honest with the public. In fact, he resisted the temptation to say, "I told you so," when Trussonomics was imploding. But he has laid the foundations to deliver these difficult decisions. The thing is, he's going to have a cabinet full of ministers who are going to want to bring back money to spend on their pet projects. And when he's got to hold this coalition together, he's not going to want to disappoint anyone.
Real test for the Prime Minister now, Tom. The lectern's out in front of number 10 Downing Street. It's his first appearance as Prime Minister to address the public in the UK. Let's see if he's on time.
Well, he's got to be.
Is he going to be one of those Prime Ministers that's late all the time?
Well, that would be a Bill Clinton. We call that doing a Bill Clinton, and somehow, I don't know here, but
President Biden's in that camp too, TK.
Yeah, my head is spinning on this, John. Do you have a sense here, as we await Rishi Sunak, that this is finally stability, or is it going to be in the next 2-3 weeks the same chaos, Trussian-like?
There is a hope that this man is going to be the face of stability. And Tom, I mentioned this, and I might sound snarky, but I think there's a hope for a lot of people in this market that after today, TK, we can stop talking about the UK. And what does he have to do? To Lizzie's point, we still need to work out who the Chancellor is going to be. We assume it's going to be Jeremy Hunt. If that's the case, okay. Then we need a deeper understanding of what the fiscal approach is going to be. And then it's on to the Bank of England. And you hope from there, Tom, we just get back to where we were and we can move on from all of this and move on from it quickly. The fact of the matter is, though, the British people, TK, won't move on from it quickly because this cost of living crisis that we're talking about worldwide at the moment is dominating the United Kingdom as well. Interest rates are going to have to go higher. Mortgage costs are getting more expensive. And the cost of living, Tom, is going in the wrong direction.
Real rates are moving up there, and as we heard from Jordan Rochester, is the United Kingdom just out front of many other nations in the struggle. On Bloomberg Radio, we welcome you, a shot of 10 Downing Street with a different podium than the Truss podium, more stark, more corporate, I will editorialize. And off on the port side, rather on the starboard side, the right side of the door, as Mr. Sunak will come out, is Lawrence the cat with his back to the door because there's a rumor, will Mr. Sunak live at 10 Downing Street when you're that fancy?
Oh, there we go.
That was in the zeitgeist.
How many Prime Ministers has that cat outlived, Tom, in the last few years? Lizzie, can I just come to you quickly before the Prime Minister walks out? What does the Governor of the Bank of England want to hear today?
He wants the stability he's been promised. He wants to know who the Chancellor is and when this budget's going to be. And if he can confirm that it's Jeremy Hunt and it's October the 31st as expected, the markets will be happy and the Governor will be happy. Ultimately, he wants cooperation between the economic institutions of the UK. And we heard from the Chief Economist, Hugh Pill, earlier, taking a thinly veiled swipe at the Truss administration for really undermining the Office for Budget Responsibility in the Bank of England. You would hope that that's going to end now with the Sunak administration.
At 37 minutes after the hour, futures at -12, and the VIX under 30 is of note here. Earnings coming out. We'll get to that in a moment. Lizzie, I want to sneak this in if I can, and very importantly, John will hopefully go to an on-time Prime Minister here. Lizzie, will he tour the country? Will he, like King Charles after the funeral, will he go to Wales? Will he go to those those cities that were Labour and became Conservative? Will he go to Scotland? What does a new PM do?
I'm sure he will, and his constituency, don't forget, is up north in Yorkshire. I think he might be the first Prime Minister from a Yorkshire constituency, correct me if I'm wrong. He obviously took over, you'll know this, Tom, from William Hague, but he's going to need to strengthen the union, because this chaos in the Tory party is only given Nicola Sturgeon, the leader of the Scottish National Party, confidence, and he's also going to have to charm the red wall seats that put Boris Johnson into office with such a landslide. At the moment, it looks like the Tories would be wiped off the electoral map when it comes to a general election. So his message has been unite or die. He's going to have to unite the country as well as the party.
Unspoken, John, is he's a lad. He's 40-some years old. He's the youngest Prime Minister from 1812.
It's an impressive stat, Tom.
Way back. He's
very close to...
I don't think we've talked enough. He's a kid.
I think only a few years younger than Tony Blair was when he became...
Okay, thank you. But, you know, you look at the gerontocracy that is American politics. In 42, it's like in Finland, in Estonia. This is...
It could be Speaker Pelosi's child. I'm with you. Is that
or
where you're
grandchild?
going with
Is that where we're going?
You went there, I didn't. Lizzie, we've talked a lot about this being a parliamentary democracy, that the leader of the Conservative Party needs to be able to govern the party within Parliament. Lizzie, let's talk about the party membership of the Conservatives. Is this their guy?
No, but we wouldn't know, would we? Because it never got put to them. I'm sure many of the membership are annoyed about that, but it could have ended up being so divisive. Rishi Sunak didn't have to go to the membership, but I don't think it's wise to say that he would have lost to Penny Mordaunt, because perhaps the membership would have had buyer's remorse after putting Truss into number 10. But I'm sure that the party MPs are grateful that we didn't have to go through the drama, the psychodrama of a leadership election put out to the membership yet again. Because this is, I mean, I've just been stood here 7 weeks ago. You'll forgive me if I've got a bit of deja vu.
It's unbelievable, Tom, that we've been doing this the way we have. I've said a few times, we've got a system to deal with it. This is the system to deal with it. I do wonder if there's certain aspects of the policies announced by Jeremy Hunt, the Chancellor, who we expect to be the Chancellor in the weeks and months to come, Tom, certain aspects that you might have to revisit. The number one that I'm thinking of is the idea that you only offer support to offset the energy pain through to April of next year. I just wonder, TK, whether that's something they have to revisit pretty early on if the crisis over energy supplies continues.
And it's this word that's propped up, I'll say Sunday, maybe Saturday, but austerity and the new definition of austerity. And the fundamental thing, John, as you mentioned earlier, maybe Lisa, you mentioned it, it is austerity within a higher nominal rate regime. People at home, they don't care about fancy bow tie real rate stuff. They're looking at higher nominal rates across everything they do.
The former government, the former leader, to be specific, Liz Truss, tried to do something different, Tom, and it failed. Markets weeded it out very, very quickly. And I just wonder, Lizzie, what the options are available for any government right now, facing down a cost of living crisis, high inflation in places like the United Kingdom, what they can actually do. How much fiscal space is there to help out the people of countries like the United Kingdom? I believe we've lost Lizzie Burden outside number 10 Downing Street.
Okay, let's go to Lawrence Sakat.
You think Larry's got something to say on that?
I'm sure he does. Well, she said it's deja vu for him. Can you imagine the vujade the cat has right now?
Honestly, seen this one a few times. We all have. We are waiting for the British Prime Minister Rishi Sunak. When he walks out of that door, he will do so as the leader of the Conservative Party and of the leader of the United Kingdom. When those comments begin, we'll bring those comments to you. TK, we also need to talk about the earnings that are coming out. And I will say, Adidas is something I want to talk about briefly. Adidas, they have been silent for weeks on the relationship with Kanye West. And finally this morning, they come out and tell us they are terminating the partnership with Kanye West after the anti-Semitic comments from him over the last couple of weeks. Lisa, many people incredibly disappointed it's taken this company this long to make this comment.
Wasn't he responsible for about 8% of their sales or something
Something
incredible?
like that, yeah.
And they're saying that they're going to take a write-down. And the immediate effect is $246.5 million hit to net income in the current fiscal year. You're right. It took them a long time because he's pivotal to their sales. At what point does this become, though, a deal breaker given some of the recent shenanigans?
Isn't that disappointing, though, for companies that preach all of this stuff about diversity and inclusion, that you get comments like that and they go silent for weeks because he's key to their sales? Isn't that absolutely ridiculous? Think about how many times companies have had to distance themselves from certain individuals because they've done certain things, whether it's drugs, steroids, performance-enhancing drugs. They've had to step away, and then you get anti-Semitic comments by someone key to your company, and you say nothing for weeks about it.
Okay, just to be completely transparent, this was a discussion at the dinner table because there were certain members of the family who really like Kanye West's music, and can they keep listening to it? And they had this whole debate trying to rationalize it, and we just said, you know what, you either have a credo and you have some sort of ethic that you follow, or you don't, and that's the bottom line.
That stock is down by about 4% in the pre-market. Tom, I wanted to talk about GM as well. General Motors, third quarter adjusted EPS 225, the estimate 189, revenue just a little bit lighter. Nothing overly concerning in this, going into a conversation, an interview, Tom, with the leader of GM a little bit later in the next hour and 15 minutes or so. She'll be sitting down with Matt Miller, I believe.
It's a beast of its own, and I'm going to give a major shout out to Ite McCauley over at Citigroup, who I think was way out front on this. The absolute mediocrity of GM and then the surge that we saw up through the pandemic, and frankly, a rollover to revisit the mediocrity of 2018. The 10-year annual return that Mari Barr has had to be challenged by is 5.06%. 5% a year shareholder return. Can you rationalize that given an auto company? Granted, pandemic, granted, national issues, granted, technology issues, and the rest. But you just wonder when they get, is it safe to say they get Germanic, where they start developing free cash flow, like some of the European companies?
Is that Germanic?
Yeah, I mean, it's like Mercedes or BMW and the rest. I don't know, but there's always a spin here. There's always something new. They're mentioning electric vehicles today. They're going to increase production of that. Okay, great. Where's the shareholder return? That's what, I'm looking for it at 5% per year.
You want the new excuse right now, 3M. 3M, the company sees full-year adjusted EPS at $10.10 to $10.35. Previously, they had seen $10.30 to $10.80. What are they blaming? Drum roll, the uncertain macro environment, and Bramo, the US dollar. There we go.
That's going to be the catch-all. But at some point, there is some truth to this, right? I mean, the appreciation is pretty dramatic. And how much are international companies from the U.S. really going to suffer as a result? But this is the second downgrade to its outlook so far this year for 3M. How many of these multinationals have to do that before there's some sort of bigger sense? And how much really visibility do we have about how long this is going to continue for, and really how much this has to do with the dollar? I mean, I can tell you're somewhat skeptical, John, about whether this is an excuse for something else. Drum roll. What could it possibly be?
I'm just saying I'm not surprised, okay? That's all I'm saying. I'm not surprised. We'll keep an eye on the earnings for you. We understand the Prime Minister still not arrived at number 10 Downing Street. When he gets there and we have that address, we'll bring that to you. TK, the Prime Minister running late after an audience with the King a little bit earlier this morning.
This is a new king, and I'm not privy to the short meetings of an ancient queen, but you wonder if this is a new style of King Charles, where there is a substantial conversation. I don't know.
I believe we're following the car now up the mall, Tom, from Buckingham Palace.
No, we're not doing an O.J.
You don't want to do this.
Let's not
you don't want to do this.
No,
it's not a car chase.
Like I'm back in London.
This is like not acceptable. I really don't want to do this.
TK, you want to do this?
Where's Anna Edwards to help me out here?
I'll happily do this with you.
Who's gonna pick him up at the end?
It's within the autumnal glow, John, of the leaves.
In just a moment, Lisa, they'll go past Horse Guards Parade.
I can't handle this.
Onto Westminster.
There's a ceremony to
over to number 10 Downing Street.
You trying to excuse this, Tom?
I've been living for this moment, Lisa, for 20 years.
Have you?
Everything has been building up to this, to follow the car from the palace to number 10.
How did this guy, I mean, I know he married into a lot of money in that, but how did he make his money? Was he a classic investment banker?
Bit of Goldman, that kind of background, TK.
You know.
Made his own
money.
But
he wasn't like chief economist. Let's be clear. He was a deal maker.
Well, But this is the reason why it's going to be difficult for him to make some severe cuts to spending at a time of austerity, given his own largesse. I'm just wondering how that's going to play into this.
But we've had huge, filthy rich people back centuries that have run things. I mean, is it uncommon to have somebody? I mean, granted, there's levels of loaded, but is it a so what that he's that wealthy and his family's that wealthy?
Looks like they're just going past Trafalgar Square, Tom.
What do you want him to do? Stop at Greg's and
I thought we weren't doing this.
Pick up something.
How about this? When the Prime Minister actually arrives at number 10 Downing Street, I'll bring those comments to you, TK. You want to carry on following the car?
Oh,
I think we're done
I
following
don't
the
think
car.
we have a choice. Maybe there's some views of the buses are stopping, and of course here they promenade back to 10 Downing Street where Lizzie Burden is. I want to get back to earnings and to say the tech earnings today, and I think, Lisa, you mentioned this in your brief. Google is the real first look at the future of digital advertising, which is a growing part of Amazon's business. And of course, there's others out there. And my problem is we conflate Google in with Snap, we conflate Google in with Facebook, and I think that's off the mark.
And then get a little look at Microsoft after the close as well, Tom.
Very important.
Two big names. Then on to Thursday. Keep talking about Thursday. Thursday's huge. If you want to talk about tech, did you see the tech names in China yesterday? Absolutely hammered. Alibaba, Baidu, JD. At one point yesterday, we're all down about 20%. Hammered.
I did a fancy chart of Alibaba, and the plunged is the right word, John, but back to a long-term support line of where they've been for years. Did they go through to a crisis low? No, but they're certainly back to a support that speaks ill of the equity markets and the trust in the new regime.
Let's touch base with Enda Curran on some of this, the Bloomberg Chief Asia economic correspondent. Enda, we saw the events over the weekend. We saw the fallout in this market. And let me tell you, in the FX market, Enda, it continues.
Yeah, it does continue, at least with the currency, say. You can point to fundamentals there, John. The sell-off in the yuan was delayed. It's now clear that the authorities are allowing it to weaken. We're seeing it go back to levels both onshore and onshore that we haven't seen in some cases at all, in fact. Now, that does, of course, reflect a strong US dollar, but it does reflect what's going on in China. Sentiment is very negative and turning even more negative post-Congress. There's no sign of a pivot on COVID-0, no sign of a pivot on the real estate story either. So that's what's happening. The equity story is a bit more
Enda, I've got to jump in. The Prime Minister of the United Kingdom, Rishi Sunak, addressing the British people. Let's take a listen.
I've just been to Buckingham Palace and accepted His Majesty the King's invitation to form a government in his name. It is only right to explain why I'm standing here as your new Prime Minister. Right now, our country is facing a profound economic crisis. The aftermath of COVID still lingers. Putin's war in Ukraine has destabilized energy markets and supply chains the world over. I want to pay tribute to my predecessor, Liz Truss. She was not wrong to want to improve growth in this country. It is a noble aim, and I admired her restlessness to create change. But some mistakes were made, not born of ill will or bad intentions. Quite the opposite, in fact, but mistakes nonetheless. And I have been elected as leader of my party and your Prime Minister, in part, to fix them. And that work begins immediately. I will place economic stability and confidence at the heart of this government's agenda. This will mean difficult decisions to come. But you saw me during COVID doing everything I could to protect people and businesses with schemes like furlough. There are always limits, more so now than ever. But I promise you this, I will bring that same compassion to the challenges we face today. The government I lead will not leave the next generation your children and grandchildren with a debt to settle that we were too weak to pay ourselves. I will unite our country, not with words, but with action. I will work day in and day out to deliver for you. This government